Hello all, welcome to BCCA's MCQ session. This is Manideep. This MCQ session is for inter-level IDT, indirect access. What are the MCQs which I am going to discuss in this session are the MCQs which were released by institute specifically as MCQs. Sir, understand at interlevel it's both direct tax and indirect tax, but in this session I'm covering only indirect tax related MCQs from the MCQs PDF which was released by institute. And then even all the past examination questions, past examination MCQs I'm going to discuss in this session. Right from the time when GST has been introduced, from that time, whatever of the exam papers we are having, either it is 2016 syllabus or 2022 syllabus, all those MCQs I have taken, I have compiled it into one particular material, and all those MCQs we're going to discuss. Not only just answering the MCQ, wherever it is required, wherever it is possible, I have explained the relevant concepts as well. So I hope it will give you a proper understanding of the MCQs. If you already have a preparation of your IDT, then this MCQ session will definitely boost your confidence. Okay, and I can assure you that out of the 8 MCQs which are being asked in the inter level for IDT, I can strongly say like 6 MCQs can be covered from these sessions, and possible 7 or even 8 MCQs can also be covered from this session. Okay, and one more thing, the PDF, I mean, the soft copy of the MCQs which I'm gonna discuss now will be available in our app, BCCA app, in free resources. You can download the app by directly going through the Play Store. You can search for BCCA with the green color logo. You can find an app. There you can download, and in the free resources column, you can find this MCQs material, or else even in the description we'll give you the app link. You can download the app, and from there go through the free resources and download from there. Okay, one my small suggestion is like, for these materials also, like many students are calling the institute. Okay, please try to understand. Okay, spend some 1 or 2 minutes time, you will definitely find the resources there. Okay, don't simply call for these things also, because online team is already having so much pressure regarding the classes and the support things. These calls also they cannot handle. Understand their concerns as well. Thank you. I wish you very all the best for you, and have a pleasant experience watching this class. Thank you.
Okay. So the MCQs we are covering are like, so institute has released a separate MCQs material module for every subject. So in that it consists of actually around some 175 MCQs including DT and IDT. But major part is from IDT only. Why? Because if you know the paper, this taxation, in this we have two parts. One part is DT and the other part is IDT. One part is DT and the second part is IDT. So actually what we think means generally 50-50 is the weightage, DT and IDT. But how it works means the paper will get is for 128 marks including choice marks. So 50-50 na for DT 64 marks and for IDT 64 marks it should be, ideal mark should be. But how it works means we have 30 marks for MCQs, I mean 15 into 2 marks questions, total we are having 30 marks. Out of this 30 marks, only 6 questions they are asking from DT. That means from DT we'll get in MCQs only 12 marks. Whereas from IDT you will get 9 questions. So 9 into 2 marks now here we'll get for 18 marks MCQs, IDT. So you should focus more on IDT considering MCQs part. When it comes to theory questions, again we have 14 marks questions, 7 14 marks questions. So 7 questions into 14 marks, Okay, it would be 98, but out of this 7 we need to write 5 questions. How these 7 questions will come means, here 4 questions will come from DET, 3 questions will come from IDT. So that means 4 into 14 here it would be 56 marks, whereas here 3 into 14 means it is 42 marks. Now if we total both DT and IDT, 56 plus 12, for DT the total marks is 68. When we check IDT, it is only 60 marks. Okay, so you think like it is 50-50, but actually the examiner, the marks he is asking is not 50-50. The marks the examiner asking is not 50-50. And what usually happens is, even though it is not 50-50, usually sir, in exceptional cases it may differ, majority of students will attempt in exam for more than 50 marks in DT. Will attempt in exam for more than 50 marks in IDT. How it works means, let's say, out of MCQs, in MCQs we'll get 18 marks. In MCQs itself there is 18 marks. And again here, majority cases what happens means, we need to write 5 questions. Out of 5 questions, majority cases you could attempt all the 3 questions from IDT. The 2 questions choice you will take from DT. Okay, only in exceptional cases we'll write 3 questions from DT and 2 questions from IDT, but most common cases like majority will write IDT. So if you look at that way, IDT, even though it is 60 marks, majority will attempt for 60 marks. So in that way, if you look at that, then IDT is important. So I'm just telling you the prominence are here. If you generally take it as 2 sections, we'll take it as like 50-50. But when we compare the marks asked in question, then DT has more weightage than compared to IDT. But considering the usual student approach, how they will attempt and all, if you check MCQs na 18 marks and this 42 also majority will write. So 60 marks a student, an average student will attempt from IDT only, whereas 40 only he'll attempt from DT. Okay. So I'm not, since GST is my subject, so I'm not telling exaggerating things here, sir. It's the usual thing which happens. Okay. So now we'll start discussing MCQs. Sir, in this module, not just the institute released module, we will even discuss the past exam question related MCQs which were there from the day the GST is there in our syllabus. So GST is in our syllabus from 2019, fully it was implemented into our syllabus curriculum from 2019. So from those attempts, all the attempts were included here. So those we'll be discussing here. Okay, so first one, who is empowered to make law for matters containing in list 1 of schedule 7 of Constitution of India? Sir, in Constitution there is schedule 7. In this schedule 7 there is article 246. This article 246 will consist of 3 lists. List 1, list 2, list 3. Okay, Constitution, Schedule 7, Article 246 consists of 3 lists. List 1, Union list, list 2, State list, list 3, concurrent list. Okay, why or what is the use of these provisions now? This Article 246 only gives the power to central and state governments to frame laws with respect to GST, to frame laws with respect to any law. Okay, the usual power to frame law comes from Article 246. Sir, whether the power is with central government or state government, that is decided by this list. If something is mentioned in union list, then the power to frame such kind of laws is with central government. But is mentioned in list 2, then the power to frame laws is with state government. So who is empowered to make law for matters contained in list 2 of Schedule 7 of Constitution of India? It is state government. Next, the power to make laws. Sir, just now I said like the power to make a law is from Article 246. But the tricky thing with GST is, GST is not a single levy, sir. GST is a dual levy, which consists of CGST and SGST. I mean, it's a tax. We calling it as a single tax, but in that there are two taxes involved. Okay, one is by central government, one is by central government. When central government is levying a tax, then it is CGST. When state government is levying, that is SGST. So to function GST, the central and state shall coordinate and work together. So, but the previous laws which were there are not framed in such a way. They were framed like either they would be levied by central government or state government. But this tax has to be implemented concurrently. Both has to act simultaneously. That interactions and the togetherness has to be there between central government and state government. So they thought like Article 246 may not work in this situation. So they introduced one more article called Article 246A, which gives the power to central and state governments to frame laws with respect to GST. Next, indirect tax is regressive in nature. So regressive in nature and progressive in nature. Progressive in nature means inclining in nature. Regressive na, it is like straight line. Indirect tax is regressive in nature. It means what? Irrespective of a person is rich, poor, no difference is there. Everyone will be taxed at a constant rate. So that's why indirect tax is called as what? Regressive in nature. Next, which of the following is not an example of indirect taxes? Sir, indirect taxes na, okay, I'll tell you one movie story. Okay, there is a movie called Legend, acted by, in Telugu movie, sir. This is not the Tamil Legend. This is Telugu movie Legend, acted by NBK. Okay, Balakrishna. Okay, so in that movie he'll tell a story. So the story is like, so one guy running on railway track. Okay, running on railway track, a train coming on the, okay, he's running towards the train. He's running towards the train and the train is also coming. Okay, so now who will get injured? Train or this person? This person only. The alternate way. Okay, he is running, okay, in the same direction where the, okay, he's running in the same direction where the train goes also. Okay, now train again comes and hits him from the behind. So in both the places, who is having the risk? This fellow only na. The same way, whether it is direct tax or indirect tax, ultimate burden on public. Okay, but understand, direct tax na, you could see it on directly on face. They'll tell this is the tax and they'll be collecting it as tax from you. But when it comes to indirect taxes, you will pay tax unknowingly. So GST is an indirect tax, customs duty is an indirect tax, whereas income tax is a direct tax. They'll collect directly on your salary, on your income. So income tax is a direct tax. In case of indirect tax, impact and incidence of tax fall on one person, different person, state government. Sir, how the incidence will fall on different persons? Sir, there is a supplier, there is a recipient. What this supplier do in usually indirect tax mechanism? Now, let's say the good price is 100. On this tax is 10 rupees. Now, the supplier will collect how much? Not 100 rupees, he'll collect 110 rupees. So, the liability to pay tax is on supplier, but the burden or incidence is on recipient. Now, again he is selling the same recipient, again he sold goods to another recipient. And this recipient will also pay 120 plus 15 rupees tax. Again, now what supplier is taking, now the incidence has been shifted to recipient and again to another recipient. So the incidence is on different persons, not on a single person. So that's why it's not on one person, the incidence of tax fall on different persons. Next, levy of indirect tax on goods and services may leads to inflation. How it leads to inflation now? So let's say there is a seller, there is a buyer. If this seller sells the goods, he sold the goods, and this buyer will pay 100 rupees, let's say the good price is 100, he'll pay 100. If there is indirect tax, let's say 10%, on this if you levy 10%, again 10 if you add, the price becoming how much? 110. If there is no indirect tax, now he'll pay only 100 rupees. So because of indirect taxes, the price is increasing. So when the prices are increasing, it leads to inflation. Next, levy and collection of indirect taxes are dealt by CBIC. Full form what, sir? CBIC? Central Board of Indirect Taxes and Customs. Central Board of Indirect Taxes and Customs. Okay. Next, in pre-GST regime, excise duty has been levied by dash government. What has been levied by dash government? Excise duty. Sir, excise duty is levied on manufacture of goods before GST. Excise duty is levied on what? Manufacture of goods. Whereas VAT is levied on sale of goods. So this manufacture related excise duty is there now. Sir, excise duty is levied on manufacture of goods except alcohol. On alcohol again state excise duty only will be there. Okay, except alcohol. On alcohol manufacture state excise duty will only be there. So in pre-GST regime, excise duty is levied by whom? Central government. Whereas VAT is levied by state government. VAT is levied on sale of goods, excise duty is levied on manufacture of goods. Next, cascading means tax on tax. So you need to understand what is called double taxation and what is called cascading. So I'll tell you with an example here. Sir, if you look at this example, there is a manufacturer whose cost is 900. The profit or markup is 100. The selling price comes to 1000. Indirect tax at a rate of 20% is 200. The total invoice price will come to 1200. Now wholesaler cost is how much? 1200. Again he sell. Sorry, here we are assuming there is no concept of ITC. We don't think of ITC. We'll assuming there is no ITC. So cost 1200, profit 100 rupees. So here the total coming what? 1300. On this 1300, if we levy tax, then this 1300 is nothing but the breakup of this previous stage 1000, this previous stage tax 200, and the 100 is nothing but the value addition made. This total 1300. How we got the total 1300 here, sir? 1200 plus 100. 100 is the value addition which we made in the current stage. Whereas the 1200 came from previous stage only. How this 1200 came? Previous stage selling price 1000, 200 is the previous stage tax. Now if you are levying tax on 1300 means you are levying tax not only on this 100, you are levying on this 1000, you are levying on this 200 also. This 1000 already taxed. Again you are levying tax on it. It is called double taxation. This 200 is tax only. On tax itself, you are again levying tax. When tax is levied on tax, then that is called as cascading. So there is double taxation, cascading, okay, and this is on this 100 levying tax, no problem. But levying tax on 1300, this 1300 includes this 1200. This 1200 is nothing but 1000, which is already taxed, and 200, which is tax amount itself. So on levying tax on 1000 is called as double taxation. Levying tax on this 200 is called as cascading. Okay, so cascading of tax means tax on tax. Who is empowered to make law for matters contained in list 1 of Schedule 7 of Constitution of India? So first itself I said, Constitution, Schedule 7, Article 246. How many lists? 3 lists. State list, concurrent list, union list, state list, concurrent list. So union list, it is levied by whom? Central government. The goods, the items which will be taxable under central excise law and new GST even after implementation of GST Act. Sir, there are certain taxes which are subsumed into GST. There is a code for us, okay, which are subsumed into GST. C na central sales tax, A na advertisement tax, L for luxury tax, and even lottery tax. Central sales tax, advertisement tax, luxury tax, lottery tax, and O for octroi tax, V for VAT, E for excise duty, and even entertainment tax, and S for it is service tax. S for it is what? Service tax. Central sales tax, advertisement tax, luxury tax, lottery tax, octroi, excise duty, entertainment tax, VAT, and service tax. Okay, so these are the taxes which are subsumed into, merged into GST. So here what we are saying, this excise duty is subsumed into what? GST. But now what we are asking, look at the question, items which are taxable under excise law as well as GST. If excise is subsumed into GST, there is no excise. But when they are doing this, they said like, on tobacco and tobacco products, even though excise duty is subsumed into GST, it is still continuing. It is still continuing even after introduction of GST. So on tobacco and tobacco products, there is still GST. Next, who is the chairman of GST council meeting? Sir, we might have a question like, why this GST council and all? Sir, okay, for this I'll explain it here. Sir, under GST, there will be GST council. This GST council consists of central government representatives as well as state government representatives. Central government representatives, central government union finance minister and state minister for finance and taxation. State government, for every state government there is finance minister from state or any other minister nominated by state will act as members. Okay, and this council has 1/3 voting power for central government, 2/3 for state governments, and to take a decision 3/4 shall be the voting power. Okay, so that means council when it takes a decision, it's not taken by only central government. It's a collective decision taken by both central and state government. Okay, so this council is the highest one. But the problem is like, as per Indian constitution, only government can frame law. This council is not government. Yes, this has representatives of government, but this itself is not government. So council, what it will do, it will give recommendations only. Actually, these are decisions only. But we cannot call it as decisions because constitution will not allow us to call it as decisions. So these are recommendations. These recommendations are implemented, will be considering this representation, central government and state government frame laws or rules. Considering these recommendations, central government and state government will frame law or rules. Okay. Now central government role, this one. What CBIC will do? Sir, it's not enough just you frame a law or you frame a rule. Sir, let's say government simply passed a rule like everybody should have above 18 years, the individual will have if he drives a vehicle, he should have a license. They should carry, they should wear a helmet. All these traffic rules are there. Just because if they frame a law, nobody will implement. There should be someone to check at the root level or at the implementation level. So that's why we have traffic department and all. The same way, if they frame GST law, it's not enough. There should be someone who should actually look after it, whether it is being implemented or not. So that implementation is carried out by CBIC. For this, CBIC will take help of GSTN as well. GSTN will provide the tech support and act as a bridge. Okay, so these are the various persons involved in GST implementation and framing and all. Okay, so we'll have a common question: what GSTN will do, what CBIC will do, what council will do, what government will do. So those are their works. Council ultimate decision maker. The decision will be framed as law by government. The law framed will be implemented by CBIC by taking the help of GSTN. You understood, right? Now coming back to the MCQ. Who is the chairman and head of council? So first we understand what is council. Who is the chairman? Union Finance Minister will only be the chairman. Next, IGST Act extends to, it's not only IGST Act, sir, CGST Act also extends to whole of India, including Jammu and Kashmir. Whole of India, it's not given in the option, but we could write including Jammu and Kashmir. Which of the following is the benefits of GST? Sir, because of GST, there are so many benefits, sir. So here, first point, if you see creation of unified national market. This is the side heading actually for the benefits of GST. Creation of unified national market. The meaning of it is like, sir, previously, you will not get input tax credit. Input tax credit means, sir, when you will get input tax credit on sales or purchase. When you are having a purchase, when you are having inward supplies, the tax you paid on such inward supply can be availed as ITC. And this ITC can be used for subsequent tax payments. Okay, let's say I have an inward. I have an inward by purchasing this tab or laptop, something. I have an inward. On that, the GST component, I can avail it as what? ITC. When I can use, when I am providing an outward service, either classes or my professional practice, when I am providing an outward service, the tax payable on outward service can be discharged by using the ITC whichever I am having. So this is the common thing. So, but the previous problem, before GST, the problem is when you buy within the state, you can avail ITC. When you buy within the state, now both seller and buyer are what? Same state. Within the state means those transactions we call them as intrastate. When they are in two different states, we call it as what? Interstate. Okay? Intrastate means both seller and recipient are in the same state. Interstate means they are in two different states, two different union territories, or one state and one union territory. It is called as interstate. The problem is, pre-GST era, you are not eligible to get ITC if it is an interstate transaction. Only on intra, you buy goods within Hyderabad, you could avail ITC, pre-GST. Okay? But now, you can avail ITC even if you buy within Hyderabad, within Telangana, or even from other states as well. If you buy from Maharashtra, Kashmir, Delhi, from wherever you buy, you can avail ITC. So, creation of unified national market, you can avail ITC. So, how it creates unified national market? Sir, previously, if I don't get ITC when I buy from other state, I will not buy. If I get ITC, then I will buy goods. So, let's say for example, there are two suppliers available. One is from Telangana, one is from Maharashtra. If I buy from Telangana guy, I can get ITC. If I buy from Maharashtra guy, I will not get ITC. So, obviously, from whom we will buy? Telangana guy only will buy. But now there is no such restriction. You buy from Maharashtra, you will get IDC. You buy from Telangana, you will get IDC. So now there is no barrier regarding these states. All the states were treated as a common market, as the same market. Wherever you buy, you will get ITC. So those barriers has been removed, and even the procedures, rules which were followed also same across the country. So this made, or this removed the state barriers and united the whole nation as a single market. So in that way, GST has created a unified national market. So is it not the benefit of GST? Yes, it is also a benefit of GST. Next one, Boost to Make in India initiative. Boost to Make in India initiative now, sir, usually without much CMA knowledge also, we know India is a country which depends more on imports than that of exports. We'll import more because we'll import lot of crude oil. Our biggest import is crude oil, so we'll be importing so much than that of we export. So at least we should control imports, and even we should promote our exports. So for that, we should encourage our manufacturers by asking them to produce within India instead of bringing or buying from other countries. So GST is something which is boosting Make in India initiative. How? Because of GST, double taxation, cascading, those effects got eliminated. When double taxation and cascading are eliminated, your cost will come down. Once your cost will come down, it would be profitable to you even if you start business or manufacturing unit in India. And even you could export your goods to outside India at a cheaper prices than that of previous, because your cost also has been came down. So that's why, I mean, in such way, it is giving the boost to Make in India initiative. So it is also a benefit to GST. Next, reduction of compliance burden on taxpayers. Reduction of compliance burden. Sir, compliance burden, when there are any rules kept, the expense we incur to follow such rules is called as compliance cost. Let's say government said like every vehicle must have mandatorily pollution controls, I mean that pollution related certificate. I mean RTA, not RTA, there'll be some private testing agencies also. They'll test your vehicle and they'll check how much smoke your vehicle is emitting, and they'll give you that pollution certificate. That is mandatory. Okay, for you to get that certificate, you need to incur some 200 or 300 rupees. So there is a rule. To follow that rule, you are incurring some 200 or 300. That is called compliance cost. Next, in income tax, they said like audit is mandatory. You need to get your books audited by a chartered accountant. So you went to a chartered accountant. He asked you to pay 30,000 as fee. So why you are paying this 30,000 fee? Because the act made it mandatory, a rule came and that rule made it mandatory. So to comply with that rule, you are incurring 30,000. So that is the cost you incurred to comply with such cost. That is called as what? Compliance cost. Those compliances were brought down in GST. You need not to go to many offices, sir, because here many taxes are subsumed into GST. So instead of going to multiple departments, one department only you will go. Next, everything made online through GSTN. You need not to go manually to the bank, and you need not to fill a challan form and all. Everything will go online only. So your compliance burden, I mean the cost you incur to follow rules will come down. Then your compliance burden will also come down. Next, buoyancy to the government revenue. So this is nothing but increase in government revenue. How government revenue will increase now? Here the law has made much more stringent, I mean much more stiff. The chances of you evading taxes are very less because it is foolproof. The tax system designed this. So since it is a foolproof system, and even the coverage also widened, some goods or services which were not covered in previous laws are also covered now in GST. So the scope increased, scope widened, and even the system has been made stringent. So because of that, the revenues will also increase. So all the four are benefits of GST only, but Institute gave it as only the reduction of compliance burden as the benefit. But actually what? All the four are benefits of GST only. So that's all the options are correct only. But Institute answer, they gave it as this one. Okay, it's a mistake in Institute as well. Which of the following taxes has been subsumed into GST? I already said central sales tax, okay, advertisement tax, luxury tax, lottery tax, octroi tax, VAT, excise duty, entertainment tax, service tax. So out of them, central sales tax is there, central excise duty is there, VAT is there. So what? All of the above. Next, India has chosen model of dual GST. So from which country we copied? Okay, we are not calling it as copying, we adopted that model. Which model we adopted? Na? Canadian GST model. Okay, sir, here I am even saying this. Canadian GST model we adopted. But there can be another question also, like, which is the first country to bring GST? France. But even though France is the first country to bring GST, we didn't adopt France model. Why not France? Why only Canada? Na? Canada also same as like India, it has states and central government differently. State government and central government differently. Canada also has. That's why we adopted what? Canadian GST model. Okay. To introduce GST, Constitution has been amended. So which amendment it is? 101st Amendment of Constitution has given the way to GST. So this one already we discussed. Tax on tax is called as what? Cascading. Okay. Again, UT-GST Act is applicable when? So you need to know, India has 28 states, not 29, sir, and 8 union territories. Okay. So what are those 8 union territories? Tell the union territories, you know. Delhi, union territory or not? Delhi is a union territory. Then Jammu and Kashmir is a union territory. Pondicherry or Puducherry is a union territory. Ladakh, Andaman Nicobar Islands, Lakshadweep, Delhi, Jammu and Kashmir, Puducherry, Ladakh, Andaman Nicobar Islands, Lakshadweep. Then Chandigarh, then Daman and Diu, Dadra and Nagar Haveli. Daman and Diu, Dadra and Nagar Haveli. Daman and Diu, Dadra and Nagar Haveli. So these are the union territories. What are those union territories? Delhi, Jammu and Kashmir, Puducherry, Ladakh, Andaman Nicobar Islands, Lakshadweep, Chandigarh, Daman and Diu, Dadra and Nagar Haveli. Okay. Now Delhi, even though union territory, it functions like state. It has a chief minister as well. Delhi is a union territory, but still Delhi has what? Chief minister. We know who is Delhi chief minister. We don't know. Kejriwal, Arvind Kejriwal. Okay. Then Jammu and Kashmir recently got elections. Even I too don't remember the chief minister name, but Congress government has framed the government. Even Puducherry is also acts as like states. Okay. If it is a general knowledge question, how many union territories? 8. But under GST, since these 3 are like states only, na, these 3 also will consider as what? State only. So in these 3 states also SGST Act only applicable. Whereas on the remaining 5 union territories, Ladakh, Andaman Nicobar Islands, Lakshadweep, Chandigarh, Daman and Diu, Dadra and Nagar Haveli, in these 5 union territories only UT-GST Act is applicable. Sir, again, one more question. What is intrastate? Both seller and buyer are in the same state. When they are in different states, interstate. When the location of supplier and place of supply are in 2 different states, or one state and one union territory or two different union territory. It is called as interstate. When it is interstate, which tax will levy? IGST na CGST or SGST? IGST will levy. Whereas intrastate na CGST, SGST. If it is within union territory, will levy UTGST and CGST. Here the question is UTGST Act applicable when it is sold within union territory. But the other options, if you see, sir, purchased by central government, not at all soldable. Sold from one union territory to another union territory. One union territory to another union territory na interstate only. IGST only applicable. Again, there is interstate supply. Again, IGST is only applicable. So the correct answer is what? Sold from union territory. But whereas institute has given the wrong options, are stating it as fourth one. So that also corrected. Under which article of Constitution GST Council has been? Under which article of Constitution of India GST Council has been constituted? Sir, Council has been constituted under Article 279A. Why Council? Na? So the problem is like state governments will not believe central government. Okay, when they bring GST, previously state has the right to levy taxes on their own. Central also has the power to levy taxes on their own. When they bring GST, it's a common law, common taxation. Only one person has to levy taxes. So central said like initially, I will levy the tax, okay, and I'll distribute the tax amount to you. States are not ready for it because they cannot give the power which they are having to central government. That's why they introduced dual GST model. Even after dual GST model also, they are still having problem. Like who will be taking the decision? If only central takes every decision, then states are only for tax revenue. They are not having the right to take decisions and all. That's why they thought of it and they decided to form something called council. So this council consists of representatives of both central as well as state. This council consists of representatives from both central as well as state, which gives a collective, okay, which gives a collective understanding among them and gives a collective power. So the states still have doubt. What if they dilute this council after some period? That's why to have a standardness for that council and which cannot be removed or diluted in the future, they inserted it through constitution. The council has been framed through Article 279A of Constitution. So nobody can remove it. Even central government cannot remove it unless it changes Constitution. So Article 279A empowers the Constitution, empowers the President to form GST Council. Article 279A. Next, GSTN. So GSTN of full form Goods and Service Tax Network. This Goods and Service Tax Network, GSTN, is a Section 8 company. Section 8 company. Section 8 company as per 2013 Act, sir. Companies Act. Whereas if you go to 1915-6 Act, this is a Section 25 company. The same thing, sir. 1956 Act or 2013 Act, Section 8 and Section 25 are similar. It's a non-profit entity. Okay, GSTN is a company. It's a corporation started by government, which is a Section 8 company. Okay, that means non-profit motor company. 51% government owned company with paid up capital of 10 crores. I mean 51% in this stake is owned by government. Next, various taxes have been subsumed into GST to make one nation, one market. Out of the following, which have been subsumed into GST? Sir, does customs duty subsumed into GST? Customs subsumed into GST? No, we could easily answer this. That's why customs we are having separately for 10 marks, GST for 40 marks. So we cannot say that they are subsumed. Oh, this is not subsumed. Okay. Lottery tax, subsumed lottery tax. CA laws is the code, sir, which I said previously also. Central sales tax, A for advertisement tax, L for luxury tax, lottery tax. So their lottery tax on lottery tickets. Next, tax on advertisement. This also subsumed. So 2 and 3. Luxury tax and advertisement tax are subsumed into GST. GST for goods and service tax, and it is a tax system that covers wide range of goods, companies, and even imports, sir. And mean GST is levied on goods and even on companies and even on imports. Sir, it's levied on goods and services now, yes, but there is no other option which is much more better fit than this. Okay. Sir, here also we could levy now product systems exports. Sir, exports now no tax. On exports there is no tax. That's why we couldn't take this. Whereas A, if you take now, it is something like only on goods. B, if you take now, it is something like only on service. But C option is much more better. It is levied on goods, it is levied on companies, and it is levied even on imports. Okay. So with this first chapter we completed, sir. Again I am repeating, sir. The introduction chapter, okay, alone has 18 marks weightage. 18 marks weightage. There are totally some 7 questions, sir. I'll tell you the questions also. See, from mock test paper, sir, there are total 8 questions. One, difference between direct taxes and indirect taxes. Second one, benefits of GST. Again, this also benefits of GST. Constitution and functioning of GST Council. How the council is framed and the functions of GST Council. Then taxes that are subsumed into GST. Then what are the reasons to impose taxation and the features of indirect taxes, features of the qualities of indirect taxes. Then these questions are only part question is related to first chapter. Next, what are the issues in pre-GST regime that have led to GST, issues in pre-GST that have led to GST, and then what are the same questions, sir, and again GSTN related. So totally there are 8 different questions, sir. I'm again writing here. Council related one question. Second one is related to GSTN. Third one is related to benefits. Fourth one is related to need for GST. Next, fifth one is related to subsumed into GST, taxes subsumed. Sixth one, direct taxes versus indirect taxes. These only got repeated, I guess. There is no other extra question also. Benefits of GST, I wrote. Benefits of GST. Okay, these 6 topics. If you look at the past paper questions and past mock test paper questions, especially in the recent 23 syllabus, question number 2, 3, 4, 5, these 4 questions are from DT. Question number 6 has again 2 sub questions, 6A and 6B. If you look at the past 2 attempts, either December 2023 or June 2024, the 6A is from first chapter, 6B is also from first chapter, and those 2 questions are one among these 6 questions. One among these 6 questions. Okay, so that means 14 marks you are getting from here, and there are 2 MCQs commonly. At least in worst case also we can expect 1 MCQs. That means the first chapter alone, how much you are getting, sir? 16, minimum of 16, and it may go till 18 marks. Only first chapter. Hardly the first chapter consists of 5 to 6 pages, sir. Okay, but once again I'm telling you, for these 6 topics, either my material you are referring or any other material you are referring also, my best suggestion is like go and look at the suggested answers also once again, or the mock test papers once again. Okay, because when I prepared material, I didn't know this would happen. If this would happen, I might have copied the same answer in my material as well. This I identified recently. This is happening and all. Okay, why we can't study our own material now, or sir, generally whoever the author gives. If you look at the benefits of GST itself from the mock test paper, sir, it is like, see, it was like 1.5 page is there. What I'll do generally when I'm giving material or when we are discussing in class, we'll explain the whole concept here. But when we're writing, we'll condense it. We'll condense it and we'll cut short it and we'll give it in the material. But that time we thought like maybe one question may come from first chapter or not. But now if you look at the trend, how many questions are? 2 7 marks questions you are getting from first chapter. And hardly 7 8 questions if you study now, you'll get 14 marks. So those 7 8 questions, instead of reading from the material from you are using for taking classes, go only for this chapter, only for this question, go and read the institute related suggested answers or mock test paper answers only. If you read first time, if you read now, you'll feel it like the answer is lengthy, some new words might be coming in the sentences as well. But if you read 3 4 times, it will be easy only for you and you'll get more marks in exam. Otherwise, everybody will say like I'll write so much in GST and they'll not be getting more marks in GST. The problem is this only. This chapter, even if you read my own material also, you'll know these 2 questions. You'll write an answer, average answer, you'll write and come. Then you'll get 3 marks for both the questions. 6 marks only you'll get out of how many? 14 marks. But if you write the suggested answer or mock test paper related answers, then your chances of getting at least 6 marks for every 7 marks will be there. So you'll increase it to 12 marks. Okay? There are high chances from here, so don't ignore this topic. First chapter, sir. Okay? The problem is like now supply chapter got very least weightage. Okay? Almost there is no question from supply they are asking. If at all they ask a question from supply, then from first chapter they'll ask only one question. But the trend, the past 2 attempts they are asking from first chapter only. Even in the recent mock test paper also, both the questions are from first chapter only. So supply they are not asking. So what I can tell you is like supply focus only on important areas. Like the basic supply definition, schedule 1, 2, 3. Composite mixed supply, 4 topics. Other than that, you don't need to read it much more deeper and deeper because you are not getting a 7 marks question there. Okay? Even if you study already now also, at least the day before exam we have only little time because you need to cover both DT and IDT. So in that little time whatever you have, give more time to first chapter, very less time, or the select 2 topics only you study from supply chapter. That's what I tell. Okay? The term supply. The term supply includes, supply is defined under 7 subsection 1 clause A. It says like supply includes sale, transfer, barter, exchange, license, lease, rental, disposal carried out by a taxable person for a consideration in relation to goods, services or both in the course or furtherance of business. Okay, supply includes sale, transfer, barter, so and so carried out by a taxable person for a consideration in relation to goods, services or both in the course of furtherance of business. So here the term supply includes sale, transfer, barter, all of the above. Which of the following is not considered as goods? What is the definition of goods, sir? Good means every kind of movable property. Good means what? Every kind of movable property. It has inclusions and exclusions. It excludes money and securities. It excludes what? Money and securities, and includes actionable claims, growing crops, grass and things attached to land which are agreed to be separated before making supply. Okay, so money is not a good, and even securities na, shares, bonds, debentures are also not goods. So now tell the first point, sir, whether 10 paisa coin having sale value of rupees 100 is good or not. Good only, sir, because money, if it is having only face value, sir, in my pocket I am having a 500 rupees note. If I give it to 500 rupees, will you give 5,000? You'll go only 500 now, so that is money only. But these are some antique collection of coins, okay, the old coins which were not in existence, which has no commerciality or legality currently. Those old coins, if you are buying for an extra amount, those are goods only. Next, shares. So, okay, this 10 paisa is goods, but shares is not goods because securities are not goods. Whereas lottery tickets are goods only. Lottery tickets were covered, sir, money and securities, and then we said actionable claims. It includes actionable claims. Actionable claims are nothing but what? Lottery ticket. So lottery ticket is part of good, whereas securities is not part of good. So B is the answer. Which of the following activities are neither treated as supply of goods nor supply of services? The transactions which are treated as neither supply of good nor supply of services are given under Schedule 3. Schedule 3. Schedule 3, another name is negative list. The another name is what, sir? Schedule 3, negative list. See, these are the negative list. What are the activities that are covered under negative list? Services of funeral, burial, crematorium, mortuary, including transportation of the deceased. These are neither supply of good nor supply of service. Next, sale of land and building. When land and building is sold, it's not supply of good nor supply of service. However, this will be covered under negative list only when the entire consideration is received after completion. Sir, let's say in front of our campus, there is a vacant land. There, a builder came and he just started constructing a building, and he kept the plots available for sale. So I went there and I booked a plot there. Now, when I booked the flat, I paid consideration of some 5 lakh rupees. Even though the flat cost is 1 crore, I paid only 5 lakhs now. Now tell me whether the consideration either wholly or partly paid before completion or after completion? Before only. Before completion I paid. If I pay some amount, at least 5 lakhs also before, it would be considered as supply of service. If the entire consideration, so this building completed or construction? This building, it is completed or still work going on? Major construction completed. Now how we will decide means, if we start using it, it is considered as completed. If we start using it, when we occupy it, it is considered as completed. We need not to get always certificate. This building we already started using now, so it is what? Completed only. Now if this building is sold and if the owner got some consideration, this is after completion only he got the consideration. This is negative list. Whereas the building which I am talking about, the opposite one, which is under construction one, there the consideration is received before completion. So it is not in the negative list, it is treated as supply of service. Okay. And then actionable claims are covered under negative list. So actionable claims includes bills of exchange, lottery tickets, okay, negotiable instruments. All these are actionable claims only. But out of them, betting, casino, gambling, horse racing, lottery, online money gaming, these specified actionable claims are goods only. Other than this now, what are the other actionable claims? Check, bond, demand draft, promissory note, those are also actionable claims. But they are excluded. That means check is not supply, demand draft is not supply, promissory note, bills of exchange is not supply. But whereas betting, casinos, these are supply of goods. Okay. Next, functions performed by MPs and MLAs, employee providing services to employer, Supreme Court or any other court and tribunal services, or these are covered by negative list. Okay. So now if you see which of the following are neither supply of good or service, sir, answer is all of the above is incorrect, sir. What is the answer? Correct answer, sir. The correct answer is sale of land of building only is neither treated as correct answer. Next one. Gift not exceeding in value in a financial year by an employer to an employee shall be treated as supply of goods or services or both. When can a gift will be treated? Sir, where an employee providing services to employer, it is not a supply. Employee providing services to employer for salary, not a supply. But there is one point in Schedule 1 which says like Schedule 1. Schedule 1 is about deemed supplies. Deemed supplies na transactions which are treated as supplies even though there is no consideration. Even though there is no consideration. Schedule 1. Supply even no consideration. Okay, there one point under Schedule 1 there is one point where there is any transfer of goods or services between distinct persons or related persons amounts to supply even though no consideration as per Schedule 1. Even though no consideration, it amounts to supply. So now if employer gives any gift to employee, this gift is given without consideration to employee. Na? If some at any point of time when you are calling it as gift means for that there is no consideration. So employer given a gift to employee without consideration. As per related persons definition, employer and employee are related persons. Since employer and employee are related persons, now this employer given gift to employee and the gift value is, if the gift value is greater than 50,000 in a financial year, then it is supply. Up to 50,000 it's not a supply. Why na? For employer, let's say there is a festival, employer given a sweet packet to employee. 1,000 rupees, one sweet packet he purchased and given to employee. This is also gift only, sweet packet. Generally, sweet packet if they give also, generally it is called as what? Gift. If that also treated as gift, and I mean this point will apply, transfer of goods and services between distinct person and related person. The sweet also transferred from employer to employee. It will also become supply. And even on the sweet packet which they given freely also, on that also GST has to be levied. But to exclude such kind of situations, they said like, no, those small amounts and all, you need not to treat them as supply. Only when the gift value aggregately na, the total amount in a financial year to an employee is more than 50,000, then only treated as supply. Not to be treated as supply of gifts not exceeding value, what value? 50,000. When it exceeds 50,000, then it is supply. Next. Tell me this one. A hotel provides 4-day, 3 nights package with facility of breakfast. This is called as composite supply, mixed supply, both mixed and composite supply, composite supply. Okay, let me, there is one thing important, sir, composite supply and mixed supply. What is called composite supply? When two or more taxable supplies of goods or services or both are naturally bundled and supplied in conjunction with each other, and one of them is a principal supply, then that is called as composite supply. TV along with remote, composite supply. Because when you buy a TV, you expect remote, or always you think like you'll go there and you'll switch. Usually now we'll expect remote. AC, remote. Along with for AC, we'll even for TV also, we'll expect installation, delivery, air conditioner, remote, and AC stand as well. So 5 things. All these bundle or not? Bundle. But all these 5 will expect together or will expect them separately? All these 5 will expect together as a bundle, and which is a natural expectation only, because everybody in the business will sell like that only, and even a common customer will think of like that only, and there may not be a separate price for them, then we'll treat it as what? Composite supply. When the bundle is not naturally bundled, I mean the items in the bundle are not connected to each other, they are not sold usually like that. Okay, no, I mean majority of businesses will not do like that. Even the majority do like that. The customer perception is not usually. E class ke na meru. Okay, even though majority or not there, the usual perception is not, then we call it as what? Mixed supply. For example, you bought a detergent powder 5 kgs packet, along with that you got a bucket as well, so that you can wash clothes and all. You understand or not? You got a 5 kgs detergent powder from DMart. Along with that 5 kg detergent powder, you're getting a bucket as well. Okay, so that within the bucket, using the bucket, you can wash clothes and all. Can we treat both of them as mixed supply or composite supply? Composite supply. Why? The point is whether both of them are connected or not. They are not connected. Why? Because the bucket has an independent use. Who said like only bucket will be used only for washing clothes? It can be used as a dustbin as well. It can be used for some other purposes as well. So we cannot say it is solely for that purpose. They are not integrated. They are not connected. And in one more way, who will buy always bucket whenever you buy a detergent powder? It's not like we'll always buy that one. But whenever you buy a TV, you'll always get remote. You don't say like I have a old remote. Just if you give TV, it's enough. That and all will not talk. But when it goes to detergent and bucket example, we'll buy. Will not buy every time as together. So that's why it is what mixed supply. But when it comes to TV remote, it is composite supply. Mobile charger, composite supply. Okay. So sir, this is one thing, sir. This composite supply and mixed supply, either if you study now, fine. Even if you don't study also, if you go to final also, it will not leave. This is one favorite point, favorite topic from supply chapter. If at all, CMA Institute think of asking a question from supply chapter, always their first priority will be composite supply and mixed supply. Only if composite supply, mixed supply, exceptional cases, at least they'll test an MCQ. If that all, we cannot even expect a paper without composite supply and mixed supply. If there is no question, then there is no question from supply usually. Okay. Even in final also the same thing, the same concept. Even in final also there is around some 4 to 5 marks weightage for composite supply and mixed supply. So remember the definition as well perfectly for composite. Previously I said some 7 questions in first chapter. You wrote down now. Now the 8th one is what? Composite supply and mixed supply. I am telling even the guest questions as well. In supply chapter, the supply concept, what is called supply I explained previously. Supply includes sale, transfer, barter, exchange, license, lease, rental, disposal carried by a taxable person. That question. Next, second one. Schedule 1. Schedule 1. Then Schedule 3. Schedule 3 is nothing but negative list. That also I explained. Funeral, burial, crematorium services, land and building, actionable claims, MPs and MLAs, that one. Then the 4th one is composite supply and mixed supply. So only after completing these 4 questions, you could read any other topic from supply. And next, for considering the subject perspective, we need to study goods and service. Good and service definition, because the name itself, goods and service tax. At least we should study good definition, service definition, distinct person, related person. Distinct person definition, related person definition. You know distinct persons means when a person is having multiple registrations under GST which are linked with the same PAN. BCCA is having a same PAN, but it has registration in Telangana, it has registration in Andhra Pradesh, it has registration in Chennai. Then since it is having same PAN, we cannot call all the 3 offices or branches as one person under GST. Yes, maybe technically the same material will use all the 3 branches, the same faculty may go at all the 3 branches, but for the sake of GST, we should look at like all the 3 branches are 3 different persons. That is the concept of distinct persons. Okay. So now composite supply, mixed supply. Mixed supply, sir. 2 or more individual supply of goods, services or any combination of thereof made in conjunction with each other for a single price, and it is not a composite supply. I am selling bundle of goods for a single price, but it is not a composite supply. I am selling bundle of goods for a single price, and if they are naturally bundled and they are in conjunction with each other, one of them is a principal supply, then that is called as composite supply. If it is not composite supply, then it is called as what? Mixed supply. Okay. If it is a composite supply, sir, either composite supply or mixed supply, it is a bundle. It consists of 4 or 5 elements. In composite supply, out of the elements, whichever is principal supply, that rate has to be levied on the total bundle. In mixed supply, again there are 4-5 elements. Out of those, whichever attracts highest tax rate has to be levied on the total bundle. Composite supply na, you should take principal supply ka tax rate. If it is a mixed supply, take the tax rate whichever is having the highest rate. Which of the following are the essential elements of a mixed supply? Essential elements of a mixed supply. Supply is made by a taxable person. Yes. Consists of 2 or more individual supplies or both, but it is not naturally bundled. Yes. And made for a single price. Yes. So all the above are elements of mixed supply. Next. A supply that consists of two or even more services would be classified as a provision that describes the variables that are subject to a higher rate of taxation. When you apply higher rate of taxation among them, which it is? Mixed supply. Which of the following is not a supply under CGST Act? So this is related to Schedule 1 as well as 7. Goods supplied free of cost by Exemptions to its agent for further supply to customer at 5,000, for which invoice is issued by agent. So here, between principal and agent, if there is any transfer of goods between principal and agent, if there is any transfer of goods, it is supply, even though there is no consideration between principal and agent. If there is transfer of goods between principal and agent, it amounts to supply. Where it is given? It is given under Schedule 1. Okay. So if you look at the first point, goods supplied free of cost to whom? Agent. So principal giving goods to agent free of cost also covered as supply. Where it is covered? Schedule 1. Next, import of services free of cost. Sir, whenever import comes, you should remember this table. Import of services. Import of services for a consideration. If it is an import, sir, when we call it as import, when the service is brought from outside India, import of service for a consideration, then it is a supply. Irrespective, you need not to check any other thing. If there is an import of service, if there is consideration, then it is what? Supply. If there is no consideration, then you should check two conditions. Whether it is from related person, whether the supplier and recipient are related persons or not, you should check if this satisfied. Then you check whether the service which you imported is related to business or not, you should check. If both these conditions are satisfied, then it is what? Supply. If there is an import of service, consideration is there, na? Supply. No consideration also, it can be supply when it is from related person and it is in the course of furtherance of business. Now come back to our MCQ. Importation of accounting service for business purpose, free of cost, from a dependent father, so related person only, residing in US. No consideration. Import of service, no consideration. What are the two conditions we should check? Related person, dependent father, related person. Next one, business. Yes, for business purpose only. So it is also supply. First one is supply, second one is also supply. Now third one. An expensive watch gifted to an employee for 50,000, no other gift provided to such employee. So this is also not supply, sir, actually. This is also not supply, because only if it exceeds 50,000, then it is supply. It is just equivalent to 50,000. So this is also not a exceeds 50,000 supply. Here it is not exceeds 50,000 then supply, but here it is what? Equivalent to 50,000. So this is also what? Not a supply. So that means out of the three there is no option which is called as not a supply. All the three are supplies only. Maybe like when we are copying, the D option got missed. Maybe D might be the supply, but A, B, C are not supply. A, B, C are supplies only. Sorry, A, B, C are supply. Sorry, correct only, sir. Correct only. Let me tell you. C option correct only. When it exceeds 50,000, it is supply. Here it is how much? Less than 50,000. So that's why it is not a supply. The question asked also, which is not a supply. Here, gifted to employee. Employee given a gift, employer given a gift to employee would be treated as supply only when the amount is more than 50,000. Here it is less than 50,000. When it is less than or equivalent to 50,000, it is not a supply. That's what here given. Clear? In case of import of goods, sir, import na interstate, intrastate. Why not intra? Because they are not in the same state. Okay? And actually the definition is not important. Like IGST Act section 7 defines what is called interstate. The definition is not relevant for us in interlevel. That's why we will not tell generally what is called interstate clearly. We will usually say like when seller and buyer are in two different states, two different union territories, it is called as interstate. That's what we tell. But actually if you go and refer the section 7 interstate definition, there they clearly says like first point, where the location of supplier and place of supply are in two different states. Location of supplier na here BCCA. Place of supply where I am providing service here only are in the same state, intra. Two different states, interstate. Okay? That is the first point. Second point, in the interstate definition only, second point. Straight away they say like imports are always interstate. Imports are always interstate. Why interstate? Now you need not to question also. The definition said directly like import is an interstate supply. So since import is an interstate supply, which tax we need to levy? IGST. So what is called FCM? FCM means forward charge mechanism. In forward charge mechanism, in any normal indirect tax related sale transaction, there will be a supplier, there will be a recipient. Out of these two, who will be paying the taxes to the government? Supplier will be the one who is paying the taxes to the government. So that means liability to pay tax is on supplier, whereas the burden is on recipient. Usual transactions, FCM. When it is RCM, reverse charge mechanism, the liability to pay tax is also on recipient, burden is also on recipient. Sir, if I am a seller, you are a customer now. If it is an FCM transaction, I will collect tax money from you. So who is having the tax burden? You. But the liability to pay tax to the government is with me. So the liability is with me, burden is with you. When it is RCM, na, you have to pay tax. So burden is on you. You are only responsible to pay tax as well. That's why on RCM, the liability to pay tax is on whom? Recipient. Next, which of the following can be issued by government to exempt goods which tax is leviable in exceptional cases? Sir, under section 11, to issue exemption notification, see, 11 subsection 1, 11 subsection 2. 11.1 exemption by way of notification. I mean these exemptions are issued by way of a notification in the official gazette. In public interest, these are general exemptions. Considering the society at large or considering the public at large, they will issue a notification exemption, such as exemption on educational institutions, exemption on healthcare services. These are applicable to at large, to everyone. So then they are called as exemptions which are given in public interest, and these are general exemptions. When an exemption is given in an exceptional nature, let's say there is a flood in one particular area, to give relaxation to the people who got affected by the flood for a period of 2 months or 3 months, there the GST might be exempted. Okay, that also, like let's say there is an earthquake. Because of earthquake, the buildings might have collapsed. So to revive and to come back to the normal operations, they need to again construct building. So the government say like for the coming 6 months on construction activities, on cement, on iron, GST is exempted. So that exemption is only in exceptional cases for a certain limited area, limited time. Then those are called as special exemptions. Okay, which are exceptional in nature, and these will be given by way of a special order. Now see, which of the following can be issued by government to exempt goods and services on which tax is levied in exceptional cases? Special order. Next, renting of religious premises meant for general public owned and maintained by a charitable religious trust shall be exempt. So religious trust. So best example, Tirumal Tirupati Devasthanam, TTD. Okay. Or any other pilgrimage center where the religious organization or religious trust renting rooms to pilgrims. Okay. So when they are giving the rooms to pilgrims, the rent charged should be less than 1,000, then it is exempted. If it is equal to or more than 1,000, then it is taxable. You understood, na sir? But normal hotel rooms, if someone books a hotel room, they irrespective of the amount, whether it is 50 rupees or 100 rupees, it is taxable only. In a religious place, up to 1,000, not up to, equal to 1,000 also taxable only. Less than 1,000 only exempted. Only at religious places or charitable trusts. Normal hotels and all, irrespective of the amount, they are taxable. First one. Next, the same religious places also, there will be some shops or commercial places. Again, the place is again rented by the religious organization only. Then the rent charged per month is less than 10,000. The rent charged per month is less than 10,000. Then it is exempted. Normal here in Hyderabad, if some shop or some commercial place is given on rent, it is taxable only, irrespective of the amount. Commercial place means. Whereas at religious premises, even though it is a commercial place, up to 10,000 it is not up to, less than 10,000 it is exempted. Third one, there function halls, kalyan mandaps and other ground and all they are giving on rent. Again, religious premises giving their function halls or under any other community halls or open area for rent, and the rent charged per day is less than 10,000, then also it is exempted. Here if you take a function hall, irrespective of the amount, it is taxable. Okay. So here for room it is less than 1,000, commercial places less than 10,000 per month, and even community halls less than 10,000 per day. So first one is per day, last one, third one per day, whereas the second one is per month. Okay, here they given per day, here per month and per day. So all of the above are exempted. So what is called export? What is the definition of export? Even, okay, generally tell, what is called export? Bringing goods into India, na taking goods outside India? Na? Taking goods outside India is called as export. There are something called SEZ. You know SEZ? Full form of SEZ? Special economic zones. Okay, what are called? Special economic zones are certain areas which are designated by central government. In those designated area, if an entity starts or if a unit starts its operations within the SEZ, they'll have certain incentives like electricity at a lower cost. The land will be allocated at a lesser rent or lesser cost. Third one, they might not have taxes or subsidize the taxes, lower taxes. So those kind of incentives will be given by SEZ. Okay. Mirandra Hyderabad and local ena? Okay. Where the software companies in Hyderabad are majorly located? High-tech city, Gachipoli, Nanakramguda, okay, financial district. That is the area where the software companies are located. Why can't they start in Kukatpalli, JNTU, Amirpet, across the metro line? They could start software companies now. It would be easy for us. Access also will be easy. Why they will go till Nanakramguda? Because that is only the area which is designated as SEZ. When you start a company in SEZ, you will get subsidies, you will get electricity at a subsidized cost. The land will be allocated to you at a free of cost or at a nominal cost. Okay, there you will have some tax waivers and all. So that's why they are going to that place and they are starting the units and all. Okay, you understood now? So the point is, SEZs are a special designated areas, and from SEZs, majorly they'll do exports only. Okay, sir, what export our software companies are doing? Sir, the employees will reside here only, companies will reside here only, but the service they are providing is to foreign clients. The service they are providing is to foreign clients. So they are earning foreign currency, service to foreign country. Okay, so that is nothing but called export. So what the SEZ Act says means, the areas of SEZ has to be treated as separate islands from India. Okay, understand? SEZ areas, even though they are geographically within India, but you should assume like they are separate islands than that of India. Okay, so that means technically I got a catering contract. From here I'm supplying food to a software company which is located in financial district. It's something within 20 kilometers distance only, but you need to treat it as export. Why? Because it is in SEZ. SEZ we are assuming it as what? A separate island. So export now, it's not directly taking goods outside India. Even SEZs also, SEZ supplies also. Oh, okay. So that's why we'll not directly call them as SEZ exports, but we call them as zero rated supplies. Understand? Zero rated supplies now, one is exports. The second one is supplies to SEZ units and SEZ developers. Exports and supplies to SEZ units. Sir, what is called zero rated now? Sir, let's say one mobile, if you go and check GST rate for a mobile, it might be some 12% or 18%. The same mobile, if you sell within India, a manufacture here and sell within India, 12% or 18%, whichever the rate, it is applicable. If you export the mobile, then no tax. That's why you'll apply zero rate. So that means you cannot say mobile tax rate is zero. Mobile, the tax rate is 12% and 18%. Why it is becoming zero? Because you are exporting or supplying to SEZ. When you are supplying to SEZ or exporting, then even though it is having an actual rate, the rate will be treated as zero. Zero means not actually the rate is zero. Just because you are exporting or supplying to SEZ, we are treating the tax rate as zero. So that's why we cannot take zero and nil rated as same. Zero is different, nil rated is different. Nil rated na, the rate itself is nil. Zero na, rate itself is not zero. It has a rate. Just because it is exported or supplied to SEZ, we are taking what? Zero rate. Clear? So the supply of goods to SEZ is treated as what? Zero rated supply. Clear? Next. If location of supplier is in territorial waters, then what will be considered as location of supplier? Sir, in Goa, okay, Vellakpaina, Goa. Sir, in Goa there will be casinos. These casinos and all will be there. Those casinos and all, they'll not be in the land, okay? They'll be there in the sea, okay? In cruise ships and all, big ships and all, they'll put. The ship itself will be turned into a casino. So now the ship is located in territorial waters, not on Indian land. So now, which state we should consider it as? Sir, Andhra Pradesh or Telangana border, if you take now, we have a geographical borders. Whereas even for Goa also, till the sea starts, it is called as Goa. But once the sea water enters, to how could we call it as like which state and all? So for that reason, they are saying like where the supplier is in territorial waters, nothing but the same Goa example only. The casino running is in territorial waters. Within the casino only, there is restaurant, there is hotels and all. So those services are being provided from there. So then, where is the location? The location is coastal state or union territory where the nearest point of baseline. I mean, to which state it is nearer, that would be considered as the state. Which of the following services is notified by government for ECO? Sir, these are covered by 9 subsection 5 in chapter 9 subsection 5. What this 9 subsection 5 covers now? If something is, if a service is covered under 9 subsection 5, then the liability to pay tax is neither on supplier nor on recipient, it is on ECO. Let's say, booked a auto through Rapido. It's not the auto person will pay tax, nor you pay the tax. Sir, pay the tax na, you will not pay directly to government, nor the Rapido auto guy or the bike guy will not pay directly to the government. It's the obligation of Rapido, the app person, to pay the tax to the government. The same applicables to Rapido, Ola, Uber, all the things. Okay. Services by way of transportation of passengers by radio taxi, motor cab, maxi cab, and even a motorcycle. This is covered by 9 subsection 5. The obligation to pay tax is on whom? E-commerce operator. First one. Next, second one, accommodation services. Accommodations now, hotels and all. Okay. Let's say a hotel is booked through OYO. It's not the hotel person nor the customer who took a room. It's not the customer who pays tax to government. It's not the hotel which pays the tax to government. It's the responsibility of the ECO, is OYO or any other app. That ECO is responsible to pay the tax to government. Sir, how it pays, sir? Will it pay it from its pocket or no? Let's say, for example, Rapido. I need to book a cab. So I applied it through, I'm trying it through Rapido. So here it is a customer and here, okay. So from this guy, Rapido collected 300 rupees plus tax 54 rupees. Total 354. Now Rapido, it will not pay to the cab guy 354 rupees because 54 rupees which is collected by Rapido will pay to home government. So 54 rupees paid to government. Whereas out of 300, Rapido will take its commission. Let's say 10%. So out of 300 minus 30 rupees Rapido commission it takes now, it will pay only 270 rupees to the cab person. So now, who is paying tax to government? Either the customer, the transporter, Rapido, Rapido. So that's what here. In the same place, even if it is a hotel also, the same. OYO, the other accommodation service providers apps only will pay. This applicable even for housekeeping services. Housekeeping services na urban company. You see, carpenter, plumbing, this kind of services are provided. Neither the carpenter nor the recipient will pay tax. It's the ECO which is providing services, through which the services are offered. Such ECO has to pay the taxes. So in all the 3 cases, these are covered under 9 subsection 5. That's why all of these. Then much more deeper into this, sir. Because the next MCQ requires much more in-depth knowledge. First one. Sir, I booked a through Rapido I booked a bike, not cab. That bike guy not yet registered in GST. Okay, even I am also not registered in GST. The bike guy also not registered in the GST. Who pays the tax? Rapido will only pay the tax. First case. Second one. Assume I booked cab through Rapido. This cab guy registered under GST. Still, who has to pay tax? Rapido only has to pay tax. That means, irrespective of the original supplier, the transporter, auto person, cab person, or the bike person, whether he is registered or not, who has to pay tax? Rapido only has to pay tax. But it differs when it comes to this accommodation related services and urban, household services. Let's say, for example, if I book a room in a hotel, through OYO, if the hotel is individually registered under GST, then the hotel only responsible to pay GST, not OYO. But in the case of motor car or motor cab services, if motor cab is registered also or unregistered also, ECO only responsible. But when it comes to accommodation, where the original supplier, the hotel owner is registered, he only responsible to pay GST. Okay? If he is unregistered, the hotel owner, then ECO has to pay GST. The same applies to carpenter and plumbing services. If the carpenter is individually registered, he only has to pay GST. If carpenter is unregistered, then the urban company will pay GST. Now look at this MCQ. A hotel owner provide accommodation in Hyderabad through ECO. The hotel owner is not liable to get registered. Hotel owner registered or not registered? Not registered. Who will pay GST? E-commerce operator. Okay, so who has to pay? ECO. Next. If tobacco leaves procured from agriculture is by a registered person, then the applicability of RCM will be, sir, on tobacco leaves. Okay, in chart chapter you will find goods on which RCM is applicable. Any BTS fans here? No, none of you. Okay. The code here is BTS related only. BTS couple. Okay, these are the points to which RCM is applicable. B na BD leaves. BD leaves sold by an agriculturist to a registered person, RCM. T for tobacco. Tobacco leaves sold by an agriculturist to a registered person, RCM applicable. S for silk yarn. You know silk yarn? In school and all, the silkworm will be there. It will eat mulberry leaves, cocoon. Okay, so from there, pattu, Telugulo. Pattu చీరలో పట్టు ఎలా వస్తుందండి? From silk only we'll get. Okay, we'll see even some insects and worms will be forming cocoons and all. చిన్న బూజు పట్టినట్టుగా అనిపిస్తుంది మనకి. సాలిపురుగు అంటే నార్మల్ వెబ్ లాగా ఉంటుంది అది. గొంగల్ పురుగులు చూసారనుకోండి, వెన్ ఇట్ ట్రాన్స్ఫార్మ్స్ ఇంటూ బటర్ఫ్లై, సమ్ 10-15 days అది అలానే కుక్కున్లోకి వెళ్ళిపోయి ఉంటుంది. బట్ ఇట్స్ నాట్ సిల్క్ వామ్. సిల్క్ వామ్ ఆల్సో సేమ్ కైండ్ ఆఫ్ ప్రాసెస్. ఓకే, ద సిల్క్ వామ్ వన్స్ ఇట్ ఫార్మ్స్ ఎ కుకున్, దెన్ హాట్ వాటర్లో వాటిని పడేస్తారు, ఆ వామ్ చచ్చిపోతుంది. ఆ పైన ఉన్నదాన్నే మనం సిల్క్గా తీసుకొని వాడుతున్నాం. ఓకే, సో వెన్ అన్ అగ్రికల్చరిస్ట్ okay selling that silk yarn to a registered person, RCM applicable. BTS, B for BD leaves, T for tobacco leaves, S for silk yarn. Okay, in both the three cases agriculturist selling to a registered person. Next, CO na first one cotton. Again cotton, patti. Okay, cotton sold by a agriculturist to a registered person. Sir, again for C here we should take one other one as well, cashew nuts. Cashew nuts sold by a registered person. So C for cashew nuts as well as CO cotton as well. Okay, cashew nuts sold by an agriculturist to registered person, RCM applicable. I mean the recipient, whoever is buying, has to pay the tax under RCM. Next, U for used vehicles or seized vehicles sold by government. Sir, if you look at the RTO offices and all, the government will see so many vehicles, police stations, nearby police stations and all, you'll see so many seized vehicles. When the government is selling those seized vehicles or used vehicles in an auction, not the government is selling, but not the government has to pay tax, it's the recipient has to pay tax under RCM. Then P for priority sector lending certificates, not required to be explained, priority sector lending certificates. Next, L for lottery ticket na not to individual customers, sir. In Andhra and Telangana will not find lottery tickets most usually, but when you go to Kerala, okay, many shops will be there, like more than the mobile shops you will find lottery shops only. Okay, so there, when government is the one who organizes lottery, government sells the lottery tickets to agents, agent sells to customers. Government, when it is selling to agent, RCM applicable. Not the government, agent has to pay tax under RCM. When agent selling to customer na, FCM only, agent only has to pay tax, not the customer. Okay, next, E for edible oils. Edible oils na what, sir? Edible oil means cooking oil and all. Okay, on them also RCM applicable. So this one, if you see, if tobacco leaves procured from agriculturist by a registered person, then applicability of RCM will be, RCM is applicable as this is a notified good. Next, composition scheme. You know composition scheme? There are two types of composition schemes, sir. One is under 10 subsection 1, another one is under 10 subsection 2a. 5 minutes, sir. I'll just give the briefing regarding the composition scheme, then we could answer MCQs easily. There are two schemes, 10 subsection 1, 10 subsection 2a. Under 10 subsection 1, 3 people are eligible. One is manufacturer, the other one is restaurants one, and the third one is any other supplier of goods. Any other supplier of goods. They will not mention it as trader, manufacturer, restaurants, any other supplier of goods. You should be one among those three. Second one, your aggregate turnover should be within 1.5 crores. Your aggregate turnover should be within 1.5 crores in the preceding financial year, not in current year, in the preceding financial year. The question is, how do we calculate aggregate turnover? Okay, understand, sir, simple one. Aggregate turnover. What is the meaning of aggregate? Aggregate meaning cheppandi. What is the meaning of aggregate, sir? Total. Super. Genius. Then tell me, what is the meaning of turnover? Turnover means what? Just now I said genius. వెనక్కి తీసుకోవాలి మాటలు ఇప్పుడు మళ్ళీ. Turnover means super. Okay, I'm giving back genius to you. Total sales. Simple definition. Aggregate turnover means total sales. If you simply apply common sense, you need not to by heart aggregate turnover definition. Sir, they are simply asking sales. What is the sales entry? Cash account debit to sales. When you are accounting it, whether it is a taxable sale, you'll do same entry. If it is an exempted sale, same entry. It is a sale only na first thing. Whether it is exempted, taxable, sent outside India, within India, in all those cases, it is a sale. That's what aggregate turnover includes. Taxable supplies, sale only include. Exempted supply, sale only include. Export, sale only include. 3 points covered na, sales only 3 include. Next, any interstate supplies between distinct persons, that also to be treated. Branch transfers also has to be treated as sale. You should include them. All the sales you added. Next, excludes. You shall not include GST, because the same GST, the same sale entry, sir. Let's say I sold goods for 100 rupees and on the tax 18 rupees. What would be the entry I will be writing now? First, I'll be receiving cash na, cash account debit. How much I received? 118 I received. Now, 2 sales I'll write only 100, because the other 18 rupees I cannot take. I cannot use for my purpose. The other 18 rupees, what I need to do? I need to pay to government. So I'll create a liability to GST payable. How much? 18 rupees. How much I recognized as sale here? 100 only na. That's what they are saying. You should not include GST into your sale value. Only take the sale amount. So sale amount when you are taking na, you shall not take GST part or GST related amount. Aggregate turnover means what? Total sales. Total means taxable, exempted, exports, any stock transfers between distinct persons, all of them you should take. Then exclude GST. Next one, RCM. Sir, the next point it says like inward supplies on which tax payable under RCM. Inward supplies on which. Inward supply means that it is our purchase or sale. Inward supply. Inward supply. Sir, inward supply. Outward na goods going from you. Inward supply means what? Purchase. What you are calculating here? Total sales. Why will you include purchase here? So inward supplies, even though tax paid under RCM, it is purchase only. Inward supply means purchase. So inward supplies, whether you are paying the tax or the supplier paid the tax, it does not change its character. It's always a purchase. So you shall not include it in the aggregate turnover. So aggregate turnover is nothing but simple total sales. Include all the supplies, whether taxable, exempted, zero rated, or made to distinct persons, add them. Don't add GST part. And don't include inward supplies on which tax is payable under RCM. The third one, sir. Actually, if I'm a chartered accountant and I'm doing my professional practice and all, through my professional practice, I got 30 lakh as receipts. Out of them, some are taxable, some are exempted, but my receipts are how much? 30 lakhs. Take it into aggregate turnover. I have some 5 lakh rupees surplus money, which I gave it as loan. I have some 5 lakh rupees, which I gave it as loan. On that 5 lakhs, I earned 1 lakh rupees as interest. Now, this 1 lakh rupee, which I earned as interest, is also a service, but which is exempted. Previously, what I said, whether it is taxable or exempted, you should include it in the total. But here they clearly said like, include all your exempted sales, no problem, except interest and discount. If interest and discount you are getting, discount na, bills discounting la discount will be there, no, that discount, not on sale discount. If you went to some shop, there is 30%, 40% discount, I am not referring to that discount, I am referring to the discount. In bills discounting, you will be getting some discount. That discounting I am referring. Interest and discount is exempted. That alone don't include in your sale value. Okay? Even though that means I am a chartered accountant, I have 30 lakh as normal receipts, 1 lakh as interest. This 1 lakh it is my sale value only, interest service, exempted service only, but don't include this. So that means what is my aggregate turnover? 30 lakhs only. Will not include this. Exempted service or good will add, except interest and discount. If it is interest and discount, will not add. So we'll calculate aggregate turnover. If this aggregate turnover is within 1.5 crores, you are eligible for composition scheme. If it is within 75 lakhs and if you are in special category states, then you are eligible for composition scheme. However, Jammu and Kashmir, Himachal Pradesh, Assam, these three are special category states, but they opted for 1.5 crores threshold only. Okay. Next. When you opt for composition scheme, the tax rates are like, if you are a manufacturer, 0.5 plus 0.5. If you are a restaurant, 2.5 plus 2.5 on total turnover, 0.5 plus 0.5 on total turnover. Whereas if you are a trader, it is 0.5 plus 0.5 on taxable turnover. There is a difference between manufacturer, restaurant and trader. For manufacturer and restaurant, you need to apply the percentage on total turnover. Whereas if it is a trader, you need to apply percentage only on taxable turnover. Taxable turnover. So let's say there's a manufacturer, there's a restaurant, there's a trader. The total turnover is 70 lakhs, whereas taxable turnover is 50 lakhs only. Now, for manufacturer, this is taxable, sir, whereas this is total. For manufacturer, you need to levy 70 lakhs into 0.5 percentage and 0.5 percentage. For restaurant also, you need to levy 70 lakhs into 0.5 percentage and 2.5 percentage and 2.5 percentage. But trader, you should not levy tax on total turnover. You shall levy tax only on what? Taxable turnover. That means 50 lakhs into 0.5 percentage and 50 lakhs into 0.5 percentage. You got it? But traders, you need to levy tax only on what? Taxable turnover. Okay. Next. Even though you are a manufacturer, in some cases you are not eligible. When you are manufacturing notified goods, you are manufacturing notified goods, you are not eligible for composition scheme. Who is called as manufacturer of notified goods, or what are called as notified goods? Tobacco, ice cream, pan masala, aerated water na, this soda, cool drinks and all, and then bricks and tiles. Okay, they are not eligible for composition scheme. So for which of the following goods the manufacturer is not allowed to opt for composition scheme? Pan masala, ice cream, tobacco substitutes, all of the above. Aggregate turnover for composition scheme. What is the turnover limit, sir? 1.5 crores. Aggregate turnover, sir, aggregate not total. So total means you need to calculate it pan wise. Pan India. Pan India means one state across the nation. Okay. So here also the calculation of the aggregate turnover is based on state wise excluding export, all India excluding export, all India. It is what? All India wide. Pan wise. Aggregate turnover always has to be calculated pan wise. Dealers who are not eligible for composition scheme. Who are not eligible for composition scheme? Now there is a list, sir. There is a code there. Who are called ineligible for composition scheme. Since yes, na, who is having stock purchased from unregistered person? Let's say on 31st March 2024, 31st March 2024, you decided to go to composition scheme. From the next day, from 1st April, you want to go to composition scheme. But on 31st March, when you are having closing stock is not a problem. But the closing stock you are having is purchased from unregistered person, then you cannot go into composition scheme. S for stock, purchased from unregistered person. Next, I for interstate sales. When you are making interstate sales, you are not eligible for composition scheme, interstate. Next, N for NRTP. NRTP means non-resident taxable person. NRTP na non-resident taxable person. Okay, any example for NRTP? NRTP means a person who supplies goods or services occasionally, who supplies goods or services occasionally, who has no fixed place of business or residence in India. Okay, example. Selena Gomez, Justin Bieber, okay, BTS group. If they came to India just for a performance, then they came to India regularly or occasionally? Occasionally. For supply of good or service, they came for service. They has no fixed place of business in India or residence in India. So they are called as what? NRTP. So they come occasionally from outside India to provide certain kind of services, NRTP. The same way CTP, casual taxable person. Okay, CTP now, he'll not come from other country, he'll come from other state. Okay, he'll also a taxable a person who make taxable supply of goods or services occasionally, either as principal or as an agent, but who has no fixed place of business in such state. Only in such state he doesn't have a fixed place of business. So let's say I went to Mumbai and took some 5 days classes for GST. Now if I take 5 days classes, I went to Maharashtra occasionally. I go to Maharashtra occasionally. And I don't have a fixed place of business there. So then I am called as CTP for Maharashtra. If in Telangana I have a regular registration of even BCCA, okay, so if BCCA, if taking classes in Telangana, there is a fixed place of business and it's not occasional, it's regular. So it is what? Regular registration in Telangana. The same BCCA, me going to Mumbai and taking classes on behalf of BCCA in Mumbai, so I am going there occasionally, no fixed place of business. Maybe we took some function hall and taken classes there. So there is no fixed place of business. For Maharashtra, CTP. Here, regular person, CTP. Then e-commerce operators. E-commerce operators ineligible. Next, N for sir, other items are N for not only NRTP, even if he is a supplier of notified goods. Notified goods, this tobacco, ice cream, pan masala, aerated water, bricks, tiles. Next, N for non-taxable supplies. What are called as non-taxable supplies? Petroleum products. Non-taxable supplies means petroleum products. Petroleum products means HP man, high-speed diesel oil, petroleum crude, motor spirit, aviation turbine fuel, natural gas, and even alcoholic liquor for human consumption. These are called as non-taxable supplies. When you are a supplier of, when you are having stock purchased from unregistered person, when you are making interstate supplies, NRTP, notified goods, or non-taxable supplies, or if you are a CTP, or when you are e-commerce operator, then you are not eligible for composition scheme. Sir, here interstate, straight away covered. The institute answer given is actually interstate. Interstate supplies, since they are interstate supplies, they are not eligible for composition scheme. But I even marked exporters also as answer, sir, because exporters is not given as answer by institute. But even exporters are also covered under ineligible for composition, because export is also an interstate. Export is also an interstate. So if it is also an interstate, then they are also ineligible. Next, zero rated. Zero rated means what, sir? I already explained zero rated. Zero rated means supply of good, export one thing, and the second one is supplies to SEZ. Export of goods and supply of goods to SEZ developer and unit. So both 1 and 2. In case of manufacturer, except tobacco, pan masala, the composition scheme tax rate is what? 1%. Why 1%, sir? It is together 0.5% plus 0.5% CGST and SGST. It may be, sir, actually in some cases a student may take it as 0.5% also, considering only CGST. If they clearly mention like 0.5% CGST, 0.5% SGST, we will take that only. If they ask as a total rate, then we will take 1%. Whether a registered person under composition scheme can claim ITC. No, a composition scheme person cannot claim ITC. Even if you buy goods from composition scheme person, I'm a composition scheme person. I cannot claim ITC. I sold goods to you. You also cannot claim ITC. I'm an untouchable. When you touch me, you will also become. Okay, there is racism for composition scheme in GST. For a registered person, threshold limits of turnover in the preceding financial year for opting composition scheme shall not exceed 1.5 crore. Which of the following is exclusion from calculating aggregate turnover? Sir, while calculating aggregate turnover, we should include all the sales, taxable, exempted, exports, even distinct person. We shall exclude GST, inward supplies RCM, third one interest discount. Okay. Taxable supplies include, exempted supplies include, exports include. What you shall exclude? Inward supplies on which tax is payable under RCM. Okay. So we are starting now with time of supply. So in time of supply, the provisions are like, why time of supply provisions now? So when you understand the flow of GST, the initial thing which we decide is like whether it is supply or not. Once we identify something as a supply, first we'll identify whether it is a good or service. Once we identify whether it is a good or service, then we'll decide it as supply or not. If it is supply, then we'll decide who is liable to pay tax, supplier or recipient, whether it is taxable or exempted. After this point, the next point is like, what is the point of taxation? When a supply is considered as made. Let's say for example, so the goods are ordered on 20th March, advance payment is received on 26th March, goods dispatched on 29th March, invoice raised on 2nd April, whereas the ultimate delivery is made on 5th April. All these are related to one single sale transaction or supply transaction only, but there are multiple events related to that: ordering, advance payment, dispatch, invoice, delivery. So out of this n number of multiple events, which is the event we should consider, like on happening of which event we should consider it as supply? Whether on the date of ordering itself we should treat it as supplier, or on the date of advance payment we should consider it as supplier, or on dispatch invoice. So time of supply provisions helps us in deciding when the supply will be considered as made. So time of supply provisions are there are under the section 31 and then 12, 13 and 14. So section 31, sir, it talks about time limit for issue of invoice in different situations. First one, when it is related to goods, invoice has to be raised. Sir, unless you know 31, you don't know 12, 13. 12 and 13 of time are time of supply provisions. Those two are linked with section 31. 31 is about the time limit for issue of invoice, or the last date or due date for issue of invoice. Only when you are clear with 31, you will understand 12 and 13. Okay. In general cases, where goods involves movement, involves no movement. No movement na, when you go to a store and you will directly collect the goods. Okay, in such cases there is no movement. In such cases, the due date is on or before the removal of goods. Let's say you went to a DMart, you purchased goods. When the DMart has to raise the invoice, on or before the goods are removed from their premises. Before you take the goods out of the premises, invoice has to be raised. Next, supply involves delivery. The supply involves delivery, invoice has to be raised on or before delivery. Next, other cases, where supply involves installation and trial run, then invoice has to be raised on or before making them available for use. Supply involves no movement. Invoice has to be raised on or before the removal of goods. Supply involves delivery. Invoice is to be raised on or before delivery. Supply involves installation, trial run, etc. on or before the date making them available for use. You understood? Next, in case of service, Generally, in case of service, invoice has to be raised within 30 days from completion of service. Within 30 days. If it is FBI na financial institutions, banking institutions, insurance companies, when they are providing services, they have to raise invoice within 45 days from completion of service. When they are FBI and telecom operators, here the service is provided between among themselves, nothing but now SBI Hyderabad, SBI Bangalore, both are banking related only, one company only, but SBI Hyderabad, SBI Bangalore, two different registrations means both are treated as distinct persons. Where SBI Hyderabad provided services to SBI Bangalore, then in such case invoice has to be raised by the end of the quarter or date of recording it in the books of accounts of supplier, whichever is earlier. Next, continuous supply. What is called continuous supply? The supply of goods will be either continuously or recurrently, either by way of wire, pipeline, cable or any other mode. In such cases, invoice has to be raised before periodical payment or periodical statement, whichever is earlier. Periodical payment and statement, whichever is earlier. Next, sir, in case of continuous supply of service, examples, if you take a landline connection, broadband, internet broadband connection, DTH connection, so there the service will be provided continuously. Yes, month on month they'll raise a bill, but the service will be continuous. So in such cases, those kind of continuous supplies are categorized into three types: due date, ascertainable. Generally in the telecom connections and all, due date will be ascertainable. Like they'll have a due date like every month 28th or every month 2nd, 3rd, the bill will get generated. That is due date ascertainable. In such case, invoice has to be raised on or before the due date. Event linked, such as a construction contract. I agreed to pay the contractor, like the total contract is 5 crores, assume. I said like I'll pay 1 crore once the basement is completed. I pay another 1 crore once the first floor is completed. I pay another 2 crores once the third floor is also completed. Like that, an event will be kept. Once the completion of event, I'll make the payment. The third one, sir, there is no such kind of due dates or event. He'll ask whenever he wants, I'll pay whenever I have. Okay, he'll ask whenever he want, I'll be paying, like based on my availability of funds, I'll be paying. So continuous supply of service, the contracts can be classified into three types: due date ascertainable, event linked, others. Where the due date is ascertainable, then invoice has to be raised on or before the completion of due date. Where if it is event linked, invoice has to be raised on or before the completion of such event. In any other case, invoice has to be raised before the completion of, before the payment. Next, cessation. Where there is a cancellation of supply in between. When there is a cancellation, then invoice has to be raised on the date of cancellation itself. Last one, sir, sale on approval basis. Sir, in the case of sale on approval basis, when sale will be considered as happened. Let's say I'm selling machines, a customer came and he took a machine. I said like he could pay me or he could accept it only once he likes the product. So he took the machine. So when I'll consider it as sale, on the day I removed the machine, he didn't given me acceptance. So only he gives me acceptance, I'll be considering it as supply. So they are saying like invoice has to be raised on the date of approval or 6 months from the date of removal, whichever is earlier. So they're giving 6 months time. Within 6 months, if that fellow gives approval, that day itself raise invoice. If that fellow didn't give an approval within 6 months, then the day next to 6 months will be considered as the date of supply. On that we need to raise invoice. Okay. So just to recall again, with respect to goods, no movement on or before removal of goods. Involves movement, delivery, on or before delivery. Installation trial run, on or before making them available for use. Service, general cases within 30 days. FBI within 45 days. FBI telecom operators among their distinct persons by the end of the quarter or date of recording it in the books of accounts of supplier, whichever is earlier. Continuous supply of good, periodical payment or statement, whichever is earlier. Continuous supply of service, three types: due date linked, event linked, others. due date linked, on the due date, on or before due date, event linked, on or before completion of such event. In any other case, on the date of payment. When there is a cessation, cancellation of supply, on the date of cancellation. Where there is sale on approval basis, before or at the time of approval, or 6 months from the date of removal, whichever is earlier. Now, forward charge mechanism, time of supply. Understand, sir? Time of supply provisions are simple. 3 points. For goods we are discussing. Under forward charge mechanism for goods. First one, actual date of invoice, which will be given in the question only. We should find out the invoice date. Actual invoice date. Second one. No. Due date for issue of invoice. Due date for issue of, you are talking about RCM. Actual date of invoice, first one. Second one, due date for issue of invoice. What is due date? That's what we discussed in 31. Considering the situation in the question, we should find out the due date. The due date may be date of removal, date of delivery, date of making it available for use, sale on approval basis, date of approval or 6 months, that is succeeding. So that second point is only the tricky point in time of supply. First one, actual date of invoice. That straight away we can take from question. The second one is due date for issue of invoice or last date for issue of invoice. For finding out that only we need 31 provisions. Section 31 ka provisions. Next, the third one is date of payment. Date of payment from FCM point of view means supplier point of view. Supplier receives payment. Receives amount will get credited into his bank account. The date of recording in his books or date of credit in bank account, whichever is earlier. 3 points we should check. What are those 3? Actual date of invoice, due date for issue of invoice, date of payment, whichever is earlier. However, there is notification, a notification issued 66/2017, which says like date of payment need not to be considered while deciding time of supply of goods, except for composition scheme person. When you are deciding time of supply for composition scheme person, check the 3, whichever is earlier. Other than composition scheme person, ignore payment. You should check only 2. What are those 2? Date of invoice or due date for issue of invoice. The time of supply of goods where supplier is liable to pay tax under forward charge means the date of actual issue of invoice, last date on which he is required to raise invoice, third one is payment. Sir, which is the D option is like A or B, whichever is earlier. We should take only D because notification 66/2016 says like payment need not to be considered. Okay. Next. Sir, goods one simple, sir. What is time of supply of goods? 3 cases. Actual date of invoice, due date for issue of invoice, date of payment, whichever is earlier. But notification 66/2017 says like payment ignore except for composition scheme person. Then RCM goods, reverse charge. Reverse charge now who has to pay tax? So from recipient perspective, the actual date of receipt of goods, 31st day from invoice. Sir, while counting 31, leave the actual invoice date and count 31. Leave the actual invoice date and count 31. Date of receipt of goods, 31st day from date of issue of invoice. Third one, date of payment. Sir, payment recipient, will he pay the amount, receives the amount? He'll pay the amount. When he is paying means his account gets debited. So debit in bank account or entry in books of accounts, whichever is earlier. Once again repeating, sir. Date of actual receipt of goods, 31 days from invoice, date of payment, whichever is earlier. RCM goods. Then FCM services. FCM services. Whether invoice is issued within the time limit or not. 31 time limit. What are 31 time limits? General case within 30 days. FBI 45 days. So if invoice is issued within those time limits, you should check date of invoice or date of payment, whichever is earlier. If not, date of completion or date of payment, whichever is earlier. So repeating, where the invoice is raised within the time limit. The time limit under 31 is 30 days general cases, 45 days in case of FPA. The invoice is raised within those time limits, then the time of supply is date of invoice or date of payment, whichever is earlier. If it is not raised within 31 time limit, then it is date of completion or date of payment, whichever is earlier. Forward charge mechanism. Next, RCM services. RCM services na date of payment or 61st day from issue of invoice, whichever is earlier. Date of payment or 61st day from issue of invoice, whichever is earlier. What is the time of supply of service if invoice is issued within 30 days? Within 30 days, within section 31 time limit. Within section 31 time limit means date of invoice or date of payment, whichever is earlier. So earlier of 1 and 2. What is the time of supply in case of RCM? RCM for, okay, time of supply of service. So service RCM now what? 61st day or date of payment, whichever is earlier. Okay, so here date of payment or the day following 60th day, earlier of 1 and 2. Next, value of service rendered is 1 lakh. Date of issue of invoice is 5th October. Advance received is 25,000 on 20th September 2023. Balance payment on 7th October. What is the time of supply for 1 lakh? Sir, when you are deciding time of supply for services, issued within time limits na date of invoice or date of payment earlier. Not issued within time limits na completion or payment without whichever is. In both the scenarios, payment is common. So that means in case of services where there is advance payment, blindly you can decide like when there is advance payment, to the extent of advance payment, time of supply will always be date of payment only. Because in both the places payment is common. Date of invoice or payment earlier, date of completion or payment, whichever is earlier. So for time of supply, whenever there is advance payment, to the extent of advance payment, time of supply will always be date of payment. But here, out of 1,25,000 paid once, 75,000 paid another time. So in such cases, we should divide it into two parts. For advance payment, we should do separately time of supply. For the balance, we should do separately. Sir, for advance, I already said, for advance, what is the time of supply? Date of payment only. So 20th September only. Okay, next. For the balance amount, what is the balance amount, sir? 75,000. For the balance 75,000, what is the date of issue of invoice? 5th October. Whereas the service is rendered, we don't know. Next, whereas the balance amount received on what? 7th October. Invoice is raised on 5th October, whereas service amount received on 7th October, whichever is earlier, na? 5th October. Sir, this 5th October is the date of invoice. This 7th October is the date of payment. Out of these two, whichever is earlier, na? Date of invoice. So 20th September, 25,000. 5th October, 75,000. What is the time of supply of goods in case of forward charge? Forward charge goods. Actual date of invoice or due date for issue of invoice, whichever is earlier. Next concepts are in theory. We'll find about vouchers. Vouchers are of two types. Identifiable vouchers, non-identifiable voucher. Identifiable voucher na, with a voucher you can only redeem a specific good. Okay, let's say that's a Adidas voucher. You can redeem only that voucher on Adidas shoes. So in such case, only on a specific product you can redeem. It is called as identifiable voucher. Let's say you got a lifestyle voucher or you got a Amazon voucher. Lifestyle voucher, you can redeem it on any brand in lifestyle. So it is unidentifiable voucher. Amazon voucher, you can redeem it on anything in the Amazon, which is an unidentifiable voucher. Identifiable voucher, na, the time of supply is date of issue. Whereas unidentifiable voucher, na, date of redemption. So what is the time of supply for vouchers with respect to the voucher which is identifiable? Date of issue of voucher. Next, where the goods are taken on sale on approval basis. Sir, sale on approval basis, invoice has to be raised on when? In case of sale on approval basis. At the time of supply, nothing but date of approval, or 6 months from the date of removal, whichever is earlier. So that is earlier of A and B. Next, sir, value of supply. Very simple chapter, sir. Section 15. Out of all of the chapters, value of supply is very simple, sir. Only one section, one page, the total content will also come for one page only. Of one page. Okay, this one page. Okay, you got. Let me remove that. This, that's what. Let me delete all this. We'll take photos. Piracy you cannot do. Udama. Only this, that's all. One paper only. Okay. Value of supply. What it is saying? You can take transaction value as value of supply. What is called transaction value? Same. Morning class I said the apples example. I went purchased for 1000. Auntie purchased only for 300. Both are called as transaction values only. So value of supply is can be taken as transaction value. Two conditions. In customs, 4 conditions. Here only 2 conditions only. You can take transaction value as value of supply provided supplier and recipient are unrelated. Price must be the sole consideration. Except money, nothing else should be given. Okay. For the transaction value, there are inclusions, exclusions. You can take. For the transaction value, there are inclusions. Okay, 1 second. I'll remove all this. Okay, cheese. Inclusions and exclusions to the value of supply. Sir, if you remember again customs, while levying IGST, what we did before levying IGST, we added what? In customs, we start with assessable value. First, what we added? BCD, SWS, anti-dumping duty, safeguard duty, all those things we added. Now read this first point, you'll have some clarity. Taxes, duties, cess, fees and charges levied other than GST and TCS has to be added. All the other taxes except GST and TCS has to be added. After adding that, whatever the value you'll get, that only is called as value of supply. Okay, here let's say tobacco, sir. On tobacco there is excise duty and GST, both applicable now. 1 lakh excise duty purchased by her. Sorry, 1 lakh tobacco purchased by her. Your name? Vaishnavi. 1 lakh rupees tobacco she purchased. No. చుట్టలని ఉంటాయి మొత్తం రోల్ చేసుకొని ఇంకా పెడ్లర్ షీస్. హైదరాబాద్లో సగం మంది లేడీ పెడ్లర్లే ఉన్నారు ఇప్పుడు. అబ్బాయిలు అయితే దొరికిపోతున్నారని లేడీ పెడ్లర్లే ఎక్కువయ్యారు. No, she is innocent. పట్టిస్తారా అంటావు అంటే నువ్వు ఫస్ట్ చెప్పలేం. నేను అమాయకుని కాదు. Okay. Taxes, duties, cess, fees and charges levied other than GST, TCS levied under income tax act. So, for example, tobacco, Vaishnavi purchased for 1 lakh rupees. Personal purpose. Okay. On this there is excise duty at a rate of 10%. Now it is 10,000. So taxes, duties, cess, fees, charges levied other than GST has to be included. So this also has to be included. Now value of supply is 1,10,000. So let's say IGST 18% or 28% applicable now, you should levy on this 1,10,000. The other taxes has to be levied and they should be added. After adding that, whatever is the gross total is there, that only we should take it as value of supply. But you shall not include GST and TCS as per Income Tax Act. So this TCS example, section 206C Income Tax Act, TCS, what does it say means, if you buy a motor vehicle or if a person sells a motor vehicle for a value more than 10 lakhs, then the seller has to collect TCS. I mean a car showroom person, whoever sells a motor vehicle value more than 10 lakhs needs to collect TCS. There is a car value of 20 lakhs and the TCS rate is 1%. Now this car price 20 lakhs, on this TCS at a rate of 1% na 20,000. Now the question is, do we need to levy GST on 20 lakhs or 20 lakh 20,000? 20 lakhs, because they are saying except TCS. Next, any amount that supplier is liable to pay but which has been incurred by recipient. Sir, any amount that is liable to be paid by supplier but which has been incurred by recipient. Let me show you the notes. Already. You can find it in groups or else once again I'll share also. Second one, any amount that is liability or obligation of supplier met by recipients. Let's say Anil from Hyderabad agreed to supply goods to Raju of Bangalore for 50 lakhs. Now Anil agreed, so actually transportation charges also has to be paid by Anil only. So transportation charges is obligation of Anil. But the truck was sent, the truck charges are 75,000. When the goods are received by Raju, truck guy said like, no, his hire charges were not paid. So that also paid by Raju only. But the 75,000 is obligation of supplier met by recipient. So now this provision says like, no, you cannot take 50 lakhs as value of supply, add this 75,000 also, because it is obligation of supplier met by recipient. Okay, you understood? Next one, incidental expenses. All the incidental expenses, sir. Incidental expenses are similar to Customs Rule 10. Commission and brokerage, designing charges, then royalty license fee. And that I said, commission and brokerage, packing charges, designing charges, royalty license fee, inspection charges, free of cost material supplied. So all those has to be added. Same here also, same way, loading, unloading, freight, those charges if any are there, all those are incidental expenses we should add. Next, interest or late fee for delayed payment. Interest or late fee for delayed payment. So see here, Teja sold goods to Seshi for 15 lakhs. The amount to be paid in 30 days. Okay, I sold goods, that fellow sold goods to Seshi for 15 lakhs and he has given a credit period of 30 days. But Seshi paid after 6 months. 1 month is the credit period given. He paid after 6 months. After 6 months, now for 5 months, interest we are losing. So that's why he asked him to pay late fee. He paid late fee of 50,000. Whether it is called as late fee, interest or penalty, whatever the name. For delay of 5 months, we asked him to pay 50,000. Now the provision says like, initially the value of supply of goods is how much? 15 lakhs. IGST 18%, 2 lakh 70, you raised invoice for 17 lakh 70,000. But now you are getting interest or late fee of how much? 50,000. This for 50,000 also has to be added to the value of supply. But not the whole 50,000, sir, because you are not collecting GST extra on this 50,000. So this 50,000 will be treated as including GST. So 50,000 into 100 by 118 if you do na, it will be 42,373. Only that you should add it to the value of supply. But before going further, we should understand two things like credit note and debit note. Okay. When a credit note has to be raised. Okay, simple. Okay, I'll make much more simple for you. In seller books, a customer will have what balance? I'm a seller. Customer will have debit balance. Customer na my debtor. So I'll be having what? Debit balance. Already he'll have a debit balance. If his balance needs to be increased further, so already customer debit balance, you need to increase it. What we'll do? Again, debit or credit? Debit. So when the balance has to be increased furthermore, since it is a debit balance, to increase it further, you'll again do debit. That's why debit note. When the customer balance is debit and you need to reduce it, credit. So then you'll raise a credit note. Example, I already sold to Vaishnavi for 1 lakh worth of tobacco. Okay. Out of that, she didn't like the quality for 20,000 worth. Okay, she returned 20,000 worth to me. Okay, initially I debited her for 1 lakh. So in my books, she is having a debit balance of 1 lakh. But now when she returned 20,000 worth goods, her balance has to be reduced. The debit balance has to be reduced. So I'll be raising what? Credit note. So whenever there is sales return, when the goods are faulty or damaged goods, the value has to be reduced, so they'll be raising a credit note. Or else mistakenly high value invoice I have raised. Actually 1 lakh I raised for 10 lakh. It needs to be reduced. So that's why I'll raise a credit note. Or tax rate actually 18%, but I took 28%. So again her balance was debited for an extra amount. So to reduce that, I'll be raising a credit note. In an opposite way, like I actually supplied for 5 lakhs, but I raised invoice mistakenly for only 2 lakhs. So I need to do what? Further debit, further increase now. So I'll be raising what? Debit note. Okay. So now here also, initially this fellow says she has to pay us 15 lakhs. So his balance is 15 lakhs. But now we are asking him to pay interest also. Now even he has to pay interest 50,000. So his balance will be increasing. Furthermore debit. So we have to raise what? Debit note. So for this 50,000, we'll be raising a debit note. But 50,000 is not supply. Out of that 50,000, GST part we should exclude. 50,000 into 100 by 118 or whatever the tax rate will do, then we'll be getting the actual value of supply related, the interest part, which we need to include it in the value of supply. Then subsidies. Subsidies, sir, see here, very important. Subsidy given by government or others, sir. Subsidy, if it is given by others, already reduced in value. Already reduced. Sir, if the subsidy is given by government, then we should respect that subsidy. That net of subsidy amount only is value of supply. Okay, if it is given by government. If it is given by other than government, you should ignore subsidy. Gross value only you should take. If it is given by government, take net value only. So let's say for example, Telangana government said like, for all the CMA students, Telangana government said like, we'll give tabs at free of cost. Assumption only, we can assume anything. Even assumption also you cannot take. Okay. Okay, sir, then I'll change. A free bus they are giving, no? You're not coming through bus, metro. చెప్పు నాదంతా మామూలు కాదు, వెనకాల మాఫియా ఉందని చెప్పు. వెళ్ళట్లే ఎవరు బస్సులో? తిట్టుకుంటూనే వచ్చావు రేవంత్ రెడ్డిని మొత్తం అంతా. ఓకే, చోరీ తస్కరించటమా అదే, లేకపోతే ఓ ఫైటింగ్స్ ఏనా? అసలు అబ్బాయిలు ఎక్కుతున్నారు బస్సులు. వాళ్ళకి ఇవ్వాలి ఇప్పుడు 4 సీట్లు. Okay. So let's say Telangana government given tabs to government school students freely. They tie up with Lenovo company. Let us think. Actually, a Lenovo tab is for tab cost 10,000. Now government said like if a student comes and shows them the government school ID, then the Lenovo company will sell it for only 2,000. The other 8,000 will be given by government. Okay, then we call it as subsidy. So now Lenovo company received 10,000, but out of that 8,000 is received from government, which is called as subsidy. So since it is given by government, we should take only the net amount 2,000 only as the value of supply. But in the place of government, if it is given by NGO, some non-government organization, some charitable institution, then we'll not ignore, will not reduce that subsidy. We'll take the gross amount only. Gross amount na 8,000 plus 2,000, 10,000 only will be treated as value of supply. Sir, but the question is whether the amount given in the question is net of subsidy na gross amount, that we don't know. That we need to understand. If already reduced in given value, that means the value given is net of subsidy, then you don't do anything, because if it is subsidy given by government, na, we are asking to reduce. The value given itself is a reduced one, so you need not to do anything. If it is not adjusted, I mean they given the gross amount, so we should subtract. Next, given by others. Given by others, now we should not reduce, but the value given is already reduced, then we should reverse it, add back. If it is not adjusted, now you also don't adjust anything. Then discount. Discount, if it is known at the time of supply, reduce from value of supply. Discount, if it is known in the beginning itself, reduce it from value of supply. If discount is not known at the time of supply, then you should check conditions, sir. Whether as per the contract, sir, initially you went to a shop and you purchased some goods. That time no discount is given. But when you went for second time, that fellow felt happy, like when, since you again came for a second order or third order, so he said like, even on first order also he is giving you discount. I mean, first order also some 1,000 rupees, on that from 50 rupees he is returning you as discount. That is the post-supply discount, because initially it's not given, now they are giving. Post-supply discounts can be reduced only when there is a precondition. Initial supply time only. Let's say, sir, I wanted to start a bike showroom here. So I'm some Hero bike showroom I started. I purchased some 100 bikes from Hero company, Hero Motors. So once they sold the 100 bikes to me, assume one bike 1 lakh rupees, 100 bikes 1 lakh, 1 crore rupees I paid, and I got the vehicles. They gave me a target, like if I can sell all the vehicles within 2 months, then they'll give me 10% as discount. On the date of purchase, they didn't give discount. They just said a condition. That is called as a precondition, or a condition which is there in the contract at the time of supply. So subsequently, I sold all the 100 vehicles within 2 months. Now I'm eligible for getting the discount. So such discount can be reduced because there is a precondition. And for such reduction value, supplier has to raise a credit note, because on giving discount, my value gets reduced or no. So he has to raise a credit note, and I need to reverse excess ITC if any claim. Okay, then such discount can be reduced. This is about value of supply. The transaction is here. The transaction value for computation of value of supply can be rejected if the buyer and seller are related and price is not the. When it can be rejected, when you cannot take transaction value, when they are related and price is not the sole consideration. Which of the following is not includable in the value of supply? Interest, GST, interest, late fee, commission, all this we can add. The value of supply shall include any non-GST taxes, duties, cess, fee charged separately by supplier, interest, late fee, penalty for delayed payment of any consideration, subsidies directly linked to the price except subsidies provided by the central and state government, all of them has to be added. When the transaction value can be same, repetitive question, sir. What deductions are allowed from transaction value? What you can reduce from transaction value? Only discounts, sir. Packing charges, subject to conditions, amount paid, all these can be included. Only discount can be reduced. ITC, sir. There are only 3 questions only. I mean, they're asking problematic 7 marks question, na? That's why. When you're giving it as free sample, sir, first understand this thing. ITC will be given only when there is double taxation. Okay, why ITC is given means on purchase there is tax. The same goods I'm again selling. I'm a trader, assume. I purchased some goods, they got taxed. Again I'm selling them, again they are taxing. Here they are taxed, and again on selling also they are getting taxed. So there is double taxation. So why they are giving, understand the concept of ITC in a simple way. The tax which I paid at the time of purchase, they're giving it as a credit which can be eligible to set off when I am paying on my sales. Okay, let's say on my purchase 5,000 paid, the tax amount is 5,000. On my sale, let's say I need to pay 6,000. So what they are saying, like the one which I paid initially 5,000, I can adjust. The net 1,000 if I pay, na, it is enough. So the tax which I paid on my inward supplies is called as ITC. ITC is given to eliminate double taxation. Sir, when I am giving it as free sample, there is no supply, no tax at all. Then they will not be giving me ITC. Because ultimately when there is double taxation only ITC. When I am giving it as free sample, there is no tax at all there because it's not a supply. So I cannot take ITC. So what happens if I take ITC? Because initially I don't know I'll give it as sample. So I took ITC. Subsequently I am giving it as free sample. Then supply chapter will come into place. Schedule 1 which says like permanent transfer or disposal of business assets on which ITC claimed amounts to supply. You understand? I purchased 100 mobiles and I am giving them as samples. If initially I claimed as ITC, then giving these 100 mobiles as samples also is supply. If I didn't claim ITC, then giving free samples is not a supply. Okay? In case of goods disposed by way of free sample, supplier cannot claim ITC. If he claims ITC, subsequent giving free sample is also treated as supply as per Schedule 1. If the goods are received in installment, 16 subsection 2, there is a proviso, sir, which says like, where goods are received in lots, batches, then ITC can be availed only on receipt of last lot or last installment. When ITC can be availed, ITC has to be availed only on receipt of goods and receipt of the invoice as well. So both receipt of goods and receipt of documents. Next, sir. You have the liability to register. I mean, your turnover exceeded the threshold. You remember the thresholds? There are states are grouped here. One group is PT Suma, Pondicherry, Telangana, Sikkim, Uttarakhand, Meghalaya, Manipur, Sikkim, Uttarakhand, Meghalaya only, Sikkim, Uttarakhand, last A is for Arunachal Pradesh, Pondicherry, Telangana, Sikkim, Uttarakhand, Meghalaya, Arunachal Pradesh. These 6 states. These 6 states opted for threshold of 20 lakhs. Irrespective of supply of good, supply of service, or both, the registration limit is 20 lakhs. That means when you are in Telangana, irrespective of you're a goods person or service person, when your turnover exceeds 20 lakhs, aggregate turnover exceeds 20 lakhs in a financial year, you have the liability to register, PT Suma. The next one is Mint. Mint na Mizoram, Manipur, MI. Mizoram, Manipur. N for Nagaland and T for Tripura. Mizoram, Manipur, Nagaland, Tripura. Okay? MI, Mizoram. There is no state in India with I. MI, Mizoram, for that only Manipur, Nagaland, Tripura. Okay? Mint. If these 4 states na, then it is 10 lakhs. Supply of good, supply of service, or both, the threshold is 10 lakhs. All the other states it is, other than this, all the other states 40 20. For goods 40 lakhs, service 20 lakhs, both also 20 lakhs. Okay, Vaishnavi shifted to Goa. Here so much traffic, police control and all this there, so she shifted to Goa. Huh? I don't know. I don't know what you are doing in the name of tobacco. Okay. So Goa na, the threshold is 40 for goods, service 20, both also 20. So 3 groups, sir. PD Summa 20 lakhs, Mint 10 lakhs, others now 40 20. If the turnover exceeds the threshold limit, then the person is liable for registration. 22, this is a requirement. 24, compulsory registration. When a person is having TDS, TCS applicability, RCM applicability, or he is a input service distributor, or if he is making interstate supplies, OIDR na, online information data access retrieval. So those persons also it is mandatory to register. If you are making interstate supplies, irrespective of threshold, you should register. But there is a relaxation for service again. Interstate supply of service na, then no compulsory registration. Interstate supply of goods means we should go for compulsory registration, irrespective of threshold. So once liability attracts, then you should apply for registration within 30 days. Once liability attracts, you should apply for registration within how many days? 30 days. 30 days from the date on which he becomes liable to registration. Then certificate of registration is to be issued in which form? Okay, if this kind of questions are asked, generally we cannot answer, because remembering process itself is tough. He is asking certificate number and all. Okay, it is REG 06. Casual taxable person. Morning I said casual taxable person. Vaishnavi, tell. Sir, casual taxable person, remember always exhibition, circus people as example. Occasionally, where they make taxable supply of goods, services, occasionally, either as principal or as an agent, but has no fixed place of business in such state, then they are called as casual tax. Occasionally supplying goods, services, or both in a state or a union territory where he has no fixed place of business is called as CTP. Then question number 69. X of Delhi is participating in High-Tech Furniture Expo in Haryana, where he has no fixed place of business and exhibiting products. During the expo, the said products will be sold to people attending and intend to purchase. In such scenario, does X shall obtain which of the following, in such scenario, Mr. X shall obtain which of the following registration? NRTP, CTP, regular registration or no registration? Sir, X is from Delhi, sir. He is participating in a exhibition, furniture exhibition. Okay, that also in which state? Haryana. So that means in a state where he has no fixed place of business. So then he has to be what? Register himself as casual taxable person. Invoice. How invoice has to be raised? Invoice with respect to goods you need to raise in triplicate. Triplicate na 3 copies. One is for recipient, one is for supplier. Sir, the first original copy will be given to the recipient. The duplicate copy will be given to the transporter. The third copy will remain with the supplier. Whereas service, for service there will not be a transporter. So original will be with the recipient, duplicate will be with the supplier. Service we cannot pack and send, no. Still thinking, Vaishnavi, can we send or not? Tobacco, she'll understand fastly. Okay. నా పేరుతోనా? ఓకే. నువ్వు కాదనే తెలుస్తుంది కదా. సరే అయితే పోలీసులు పట్టుకెళ్ళినప్పుడు మాత్రం చెప్పుకో. ఏమని? యాన్యువల్ రిటర్న్ ఈజ్ సమ్మరీ ఆఫ్ ఆల్ ఆఫ్ ద అబోవ్ సార్. అంటే యాన్యువల్ రిటర్న్లో విల్ బీ హ్యావింగ్ GSTR1. సార్ ఫస్ట్ వన్, GSTR1 consists of outward supplies which needs to be filed by 11th of succeeding month. GSTR3B is called as the monthly return. Monthly return. This monthly return has to be filed by 20th of the succeeding month. Whereas GSTR4 has to be filed by a composition scheme person. One regular registered person will be filed regularly, which consists of his outward supplies. 3B will be filed monthly, it's the monthly return. GSTR4 is the annual return. Sorry, GSTR4 is the return which has to be filed by a composition scheme person. So annual return has to be filed by a normal person as well as a composition scheme person. So it consists of all those summaries. Next question. Does tax can be filed? Sir, here even though the MCQ is asked like this, but once you do practically, you don't even get an option to file return without payment of tax. Only when you pay the tax, then the submit button will pop up. Otherwise, it will be like freeze only. So payment of tax is required before filing the return. Next, exempt supply. An exempt supply includes, the definition of exempt supply includes, sir, exempt supply includes three parts, sir. One is the supplies which are exempted by way of notification. The whole exemptions chapter, education, healthcare, transport related. So all those which are exempted by way of notification are exempted supplies. First one. Second one, non-taxable supplies. Non-taxable supplies na petroleum products and alcoholic liquor for human consumption. Non-taxable supplies are also part of exempted supplies. Third one, nil rated supplies. Nil rated na the rate itself is nil. But in no case zero rated supplies are exempted. Zero rated supplies na exports or supplies made to SEZ, they are part of taxable supplies. Nil rated, zero rated are opposite one. Zero rated, even though rate is zero, will treat them as taxable. Nil rated, the rate itself is nil. Even in the rate chart, even in the classification, the rate itself is nil. So they are part of exempted supplies. So exempted supply consists of three parts. Supplies which are exempted by way of notification. Second one, non-taxable supplies. Third one, nil rated supplies. Next, state the taxability of satellite launch services provided by both international and domestic customers by Antrix Corporation Limited, which is wholly owned government of India under the administrative control of Department of Space. Sir, previously when these space organizations, when they are transporting satellites to space, their services are exempted, but now it is withdrawn. So the service of, sir, either Indian companies need satellites or the foreign countries or foreign country related some companies need their satellites in space. ISRO or any other space agency, when they are sending rockets to recover their cost, they'll send so many satellites with a range from 20 to 70, 80 satellites also they'll send once a rocket goes into the space. So for this satellite transportation and all, they'll collect a fee from them, which would be a recovery of their expenses for their space research programs and all. Okay, so this used to be exempted previously, but now it is taxable. So either Antrix Corporation Limited, there's one more, New Space Agency Limited. So these two entities, when they are transporting satellites, the transportation charges they collected are taxable. But why na? Initially they thought of encouraging them, so they given it as exempted. Then government thought of, it got streamlined and many orders they are getting. So they thought of generating revenue. So again they are taxing it. Okay. So we'll go to past GST related MCQs. First one. Supply of goods and services both to a SEZ unit is a intrastate, non-GST, export, none of the above. Export only. Export is, we can even call them as zero rated supplies. Reverse charge mechanism apply only on goods or only on services or both goods and services. Both goods and services. RCM is applicable on both goods and services. Next. Healthcare service is taxable where services are provided in the field of, sir. Healthcare services provided by a medical practitioner or paramedics in a clinical establishment is exempted. But the treatment should be provided in recognized medical system. Recognized medical systems na A for Ayurvedic, N for naturopathy, another A for allopathy, S for Siddha, U for Unani, Y for yoga, and last A for any other. Any other na here homeopathy is there. Ayurvedic. Ayurvedic, if you watch Acharya movie, the Ram Charan will be doing, no? That is called as Ayurvedic. Even in Triple R movie, Triple R, NTR will do something to Ram Charan. No? That is Ayurvedic. Next, naturopathy. Naturopathy, na, like if you watch YouTube and all, there's one guy famous, Manthan Sachinarayana. He comes like, drink 3. Okay. He'll talk about sprouts, drinking much water, all those things. So that is naturopathy. I mean, treating with the natural diet and all, changing food habits only. Okay, that is naturopathy. Okay, drinking like beetroot juices, bitter gourd juices, having a better kakarkai juice, sorkai juice, patlakai juice, those naturopathy. Then allopathy, the English medicine which use. Siddha Unani. So Siddha is the same thing of naturopathy. Okay, so naturopathy na, it's something, sir, with home remedies only we'll try to cure it. Like when we are having cough and all, we'll eat ilachi or lavangam, that kind of. So those are like naturopathy things only. The same, the system which they follow in Jain communities is called as Siddha. Same within the home, homely or else within the neighborhood which they are available only, they'll use for treating. But the follow in Jain communities, that is called as Siddha. In Muslim communities, it is called as Unani and Yoga. And the last one is homeopathy. Homeopathy, you know, right? Small. In schools and all, they'll used to put white balls and all. The only medicine which we like. Okay, which are not recognized na. If you watch Virupaksha movie, their heroine will do. In that movie, if you observe, like the heroine father will do that for a medical purpose only. To treat his wife only, he do the whole black magic and all. But the point is, it is not a recognized medical system. And there is something called pranic healing. Pranic healing and all. So for joint pains, many people go for pranic healing and all. Like they'll somewhat hypnotize you and convince your brain like you are not having any pain. Okay, then your brain starts believing like you are not having any pain. So then it works. Okay, it works for many. Like once, because the pain is based on the symptoms given by brain. Once your brain starts believing like you don't have anything, then you will feel like nothing. But then why it is not recognized? Na? If you are having cancer, still your brain believes like you don't have anything. But that's the problem. That's why it's not recognized. Okay. Stone therapy, acupuncture. So like in Instagram and all, someday I'll see like with needles and all, they'll put needles and all. And the other one is like these things like some cups, bowls, like I see in this 1 month back only I got these 3-4 reels instantly. Those reels also, once we see one reel for more time, then related ones only will come. So acupuncture that needles one. Acupressure they'll put this పాతకాలంలో అయితే ఈ బౌల్స్ చెంబులు ఇలాంటివి పెట్టి ప్రెషర్ క్రియేట్ చేస్తారు అక్కడ. ఆ పాయింట్లో ప్రెషర్స్ క్రియేట్ చేయడం వల్ల మన పెయిన్ని దాన్ని నర్వస్ సిస్టమ్ మొత్తాన్ని స్ట్రీమ్లైన్ చేస్తారు. నెక్స్ట్ ప్రానిక్ సార్, ఇట్స్ నాట్ పానిక్, ప్రానిక్ హీలింగ్. ఇట్స్ ప్రానిక్ హీలింగ్. Not that one. Nowhere, it's nowhere connected to you. SR నగర్లోనే ఉంటుందంట. So this question actually it is from old syllabus. Okay, but I'll tell. Where a desktop printer is sold for 10,000 with an exchange of old printer. Without exchange is 12,500. What we should take as value? Sir, actually the printer cost is 12,500. But what you gave? You gave 10,000 and a old printer. So now what should be taken as value of supply? So there you cannot take transaction value as value of supply. That value transacted is 10,000 only. Why you cannot take? Now price is not the sole consideration. Then it will go into rules. Okay, which is not there in the current new syllabus. But in the old syllabus, there used to be rules. The rule 27 says like, if you cannot take transaction value as value of supply, take open market value. Open market value, if there is some other buyer who doesn't have exchange, for what price you sell, that itself is the open market value. For what price you'll sell? 12,500. That is the value of supply. The sale document generated by supplier in case of exempted supply. Sir, generally, when I make a taxable supply, the bill which the supplier gives is called as invoice. To call it as invoice, it should consist of tax amount. Okay. If you are making exempted supply, on exempted supply there is no tax. Then it cannot be called as invoice, we'll call it as bill of supply. Same way, the document issued by composition scheme person, bill of supply, because he also cannot collect taxes. This is bill of supply. Next, renting of marriage hall owned by a trust registered under 12A of Income Tax Act. So morning I explained this. Rooms less than 1,000, shops less than 10,000 per month. If it is function hall or any other marriage hall kind of, less than 10,000 per day, it is exempted. When it is not exempted, they are asking. When it is not exempted, then charges are more than or equal to, sir. They said only more than, but it is actually more than or equal to 10,000 per day. Next, zero rated supply means export of goods, services or both, and supply of goods and services both to A. So D is the correct option, sir. Export of goods, services or both, and supply of goods and services both to A. SCZ unit. D is the correct answer, sir, not A. Because it includes both. Zero rated supplies means exports as well as supplies to SCZ. Sir, within how many days invoice has to be raised in case of service? Within how many days invoice has to be raised with respect to a service? FBI na? Okay, so generally within 30 days from the supply of service, invoice has to be raised. In case of banking companies, 45 days. Annual return. Annual return will be filed in GSTR 9, sir. It has to be filed by every registered person. In the common portal, every claim of input tax rate of a registered person, where the ITC will reflect. There are 3 ledgers, sir. Liability ledger, cash ledger, credit ledger. Liability ledger reflects all our liabilities, whether it is tax liability, interest, penalty, FCM liability, RCM liability, demand, anything will be. If it is your GST liability, it will reflect in our electronic liability ledger. Same way we'll have electronic credit ledger. The ITC which is eligible to us will be reflecting in our electronic credit ledger. Whereas cash ledger, sir, let's say I need to pay 10,000 as tax, but I have ITC of only 5,000. This 5,000 will be there where electronic credit ledger. So this 5,000 I'll use there. After using this 5,000, still how much tax I need to pay? 5,000. This will be paid using cash ledger. Sir, how will the balance, how the cash ledger will get balanced? Simple, we need to add money into the cash ledger and then we'll set off with this. Simply like we are adding money into a wallet, PhonePe wallet, Paytm wallet. If you add money, the same way you'll add money into cash ledger and you'll set off with it. Which of the following constitutional amendment governs GST? 101st Amendment. Every decision taken by a council shall be taken at a meeting by a majority of not less than 3/4. 3/4 na which one percentage, sir? 75%. In council consists of whom, sir? Chairman, Union Finance Minister, okay, and State Minister for Finance and Tax, Union Minister only they also. And from every state there is a Finance Minister or any other representative minister, okay. So that will be the council. Council will give recommendations on tax rates, exemptions, threshold limits, okay. So to take a decision in council, 3/4 should be in favor. The voting power of central government is 1/3. The voting power of state governments together is 2/3. Altogether is 2/3. In which of the following situations taxpayers need to reverse the credit? Sir, here again this is related to ITC. Under 16 subsection 2 there are two provisos. The first proviso is like where goods are received in lots installments, then ITC can be availed only on receipt of last lot or last installment. The second one is the recipient has to make the payment to supplier within 180 days from date of invoice. Okay, what if he didn't make the payment? Then the credit availed has to be reversed while filing the return of the month in which 180 days expires. Let's say 180 days expired in December. So December 12th 180 days expired. It doesn't mean you will reverse on December 12th. You will reverse when you are filing the return of December month. December month return you will file by Jan 20. So by Jan 20 you will be reversing the ITC which you availed along with interest at a rate of 18% per annum. So if payment is not made within 1 year, wrong. Not made within 90 days, not made within 45 days. Which is correct answer, sir? 180 days. Next, if the rate of tax and nature of supply of a service is not determinable at the rate of advances, what will be the rate of tax? Sir, I said previously, if you cannot identify the tax rate, which rate will take 18%? We cannot decide intrastate or interstate. Interstate. Then GST on petroleum, not crude, sir, this is crude. GST on petroleum, crude, high-speed diesel oil, motor spirit, aviation fuel. Sir, on them, these are called as what? Petroleum products. Does on petroleum products currently GST applicable? Then from when it is applicable? From the date council recommends. That's what will be levied from the date to be notified on the recommendations of GST council. So this also old syllabus one, sir. This question I am not discussing at all because this is related to place of supply. This chapter itself is not there. Under GST, service, what? Ekkundi? Yo. అది ఫైనల్లోనే నేను చాయిస్ తీసుకోమని చెప్తున్నాను. Final itself they are asking only for 4 marks. MCQ, not even a 7 marks question they are getting. And GST service would be called as continuous supply of service if the service under a contract is provided continuously on recurrent basis. Sir, exceeding, wrong answer, sir. This is 3 months only. 3 months. When a service is provided continuously or recurrently for a minimum period of 3 months, then it is called as continuous supply. Here it is given as 6 months. Sir, next. In supply chapter, there are 3 schedules. Schedule 1, Schedule 2, Schedule 3. Schedule 1 consists of transactions which are treated as supply even though there is no consideration. They are called as deemed supplies. Schedule 1, deemed supplies, transactions which are treated as supply even though there is no consideration. Schedule 2, once we fix a transaction as supply, using Schedule 2 will decide whether it is a supply of good or supply of service. Schedule 2 helps us in deciding whether a transaction or whether the transaction has to be treated as supply of good or supply of service. Then Schedule 3. Schedule 3 is negative list. It consists of transactions which are neither supply of good nor supply of service. Morning also we discussed flames, funeral, burial, crematorium services, land and L for land and building, A for actionable claims, M for MPs and MLAs, E for employee-employer relationship, S for Supreme Court, High Court, all those. Claims చేసినట్టుంది వైష్ణవి. అందరూ అక్కడికే వెళ్తారు, అందుకే అది పెట్టాను. మళ్ళీ చేస్తున్నావు ఏంటి ఇప్పుడు? ఏంటిది ఫ్లేమ్సా? ఓకే, తీసుకోలేకపోతున్నా కొన్ని ఏమమ్మా నాకు తెలియదు. అడిగి మనిషిని తల్లి అర్థం. ఇప్పుడు అనిపిస్తుంది. ఇంక 4 రోజులు క్లాసులు చెప్తే ఇంక అప్పుడు అర్థమవుతుంది నేను అసలు మామూలుని కాదు, నేను అమాయకుడిని ఎన్ని అనిపిస్తే. లేరు ఉన్న మాట్లాడరేమో ఫస్ట్, అంటే భయంతోనో గౌరవంతోనో వినయంతోనో ఫస్ట్. నేను అట్లా అనలేదు, నువ్వే అనుకుంటున్నావు, నేను అనలేదు. నేను నిన్ను ఎక్కడికో ఆ రేంజ్లో చెప్తుంటే నువ్వు అట్లా అనుకుంటున్నావు. గుర్తుపెట్టుకోండి, వైష్ణవి ఆల్ ఇండియా ర్యాంకర్. ఓకే, ఫ్లేమ్స్ చూసుకుంది ఆల్ ఇండియా ర్యాంక్ తనకి. ఏదైతేనే మనకు ర్యాంక్ కావాలంతే. అడుగుతారే ఏంది ముగ్గే దాని మీద డైరెక్ట్గా. నేను అసలు ర్యాంక్ నేను 8 ఓకే. సో Schedule 3 consists of negative list. Negative list na they are neither supply of goods nor supply of services. చెప్పండి అమ్మా 40 దానికా ఆన్సర్. రిపీటెడ్ వన్ ఓన్లీ. Under GST the prescribed time period for issuance of invoice in case of service is 30 days generally, 45 days in case of banking. What is the time of supply of goods liable to tax under reverse charge mechanism? Goods or RCM? RCM goods, 3 points will be 31st day from invoice, date of receipt of goods, date of payment, whichever is earlier of A, B or C. Which of the following services provided by Department of Post are exempted? Sir, Post Office 3 services are exempted, sir. One is postcard. The old one brown color one card will be there, postcard. That postcard service is exempted. Second one, inland letter. Inland letter na in Sitarama movie Sita will write na, those are called as inland letters within the country. Okay, it will be like a letter form only. That letter once it got folded, inside the content will be there. The postman cannot read it. But in postcard na everything will be visible to even the postman as well. So postcard, inland letter. And the third one is book post. Book post na in an envelope you will put and you will post. But a normal post will not be any, it's not like a speed post, express post, parcel post, not taxable only. 3 only exempted. Postcard, inland letter and book post. Book post na if you see wedding cards and all they'll put book post and on wedding card at one place they'll put book post and all. So it's something like when you put a letter in the envelope then that is called as book post, but it is a ordinary post, not like speed post, then they are exempted. Value of supply under section 15 of the CGST Act is transaction value itself is the value of supply. Which article of the Constitution has been given to power to make laws with respect to goods and services tax? 246A. Under GST law, which of the following are not naturally bundled? Which of the following are naturally bundled, not naturally bundled? School bag, water bottle, lunch. Sir, school bag, water bottle, fine. Who will give lunch also? So there, it's not naturally bundled. Next, rent deed executed for renting of two different floors of a building, one for residential and another for commercial to the same person. Not naturally bundled. Packaged canned food such as pizza, ice cream, pastry, cake. Not a regular one. So all the three are not naturally bundled. Only laptop and with laptop bag is naturally bundled. Under GST law, which of the following shall be discharged first while discharging liability of taxable person? Okay, sir. Sir, I have September month pending liabilities, October pending, and even November pending. Now, what is the order of discharge of liabilities? With leaving September and October, can I file November month return by paying only November month taxes? No. The order of discharging the liabilities is like, first we should set off the past month dues. All the past months you should clear. September clear, October clear, then current month. Then the second priority, current month. After current month, if any still cash ledger balance is there, you can use it for discharging demand notices and all. Demand and all, when there is any tax evasion, either because of fraud or other than fraud, they'll give notices and all. That amount if you need to pay, that is the third preference. First preference, prior period liabilities. Second preference, current month liabilities. Third one, demand related liabilities. And next, first is like all dues related to previous tax periods. Under GST law, the due date of filing final return. So final return means once you cancel, once your registration got cancelled, your business is surrendered or you're discontinuing business and your registration got cancelled, then you will file a then once your registration got cancelled, then you will be filing a final return. Why final return? By filing final return, the closing stock related, if any ITC is there, that also will reverse. Sir, since I am a registered person, I availed ITC. But now I am cancelling my registration. On the date of cancellation also I am having some stock. But this stock, on this stock I availed ITC considering they will be sold in the taxable period. But now since I am cancelling my registration, subsequently I will not have any tax on that closing stock. So that's why whatever the ITC I availed relating to such closing stock, I need to reverse it. For that purpose, we will be filing a final return. The final return has to be filed within 3 months. Within 3 months from date of cancellation or order of cancellation, whichever is later. Sir, 20th of the next month is for GSTR 3B, sir. Whereas 18th of the month succeeding quarter, this is for composition scheme person, the second one, CMP 08. Composition scheme person has to pay tax by succeeding month 18th. Sorry, month succeeding the quarter. Let's say for Jan, Feb, March, by April 18th he has to pay. For April, May, June, July 18th he has to pay. Composition scheme person. 31st December is for GSTR 9 annual return. Annual return ka due date. Annual return ka due date 31st December. Whereas GSTR 3B ka due date 20th of next month. CMP 08 is the file format we'll use to pay the taxes, which is 18th of the month succeeding the quarter. Which of the following shall be excluded while determining the transaction value of consignment for e-way bill under GST? Packing charges you should add, delivery charges you should add, where value of exempt supply if the invoice has both taxable and exempted goods. Sir, e-way bill, there is a concept called e-way bill. E-way bill has to be raised when the value of goods is more than 50,000. When the value of goods is more than, sorry, not value of goods, sir, when the invoice value is more than 50,000. Invoice value is nothing but tax plus good value. Tax plus good value together, if it is more than 50,000, then you could raise e-way bill. Okay, it's not just the good value, tax, including tax, if the value is more than 50,000, then you need to raise e-way bill. But e-way bill need not to be raised in the case of exempted goods. E-way bill is not required in case of exempted goods. So here they are saying where value of exempt supply with respect to exempt supply, e-way bill is not required. Then, and the GST law, when the goods are dispatched to a destination which is 290 kilometers from the place of dispatch, the e-way bill is valid for. Sir, just now I said e-way bill when it has to be raised, where the value of e-way bill has to be raised when there is a movement of goods, when there is a movement of goods irrespective of supply or not. It need not to be supply, but goods are moving from one place to another place, you need to raise e-way bill. Sir, I am a supplier of air conditioners. Okay, I own a brand and I supply air conditioners, and my brand is listed even in Amazon. So, no order I didn't receive, but 50 air conditioners I kept in Amazon Hyderabad hub. 50 air conditioners I kept in Bangalore hub. So like that, in all the major Amazon hubs, I kept 50 air conditioners. They are not sold, but they are moved from my place to another place. So I need to raise a e-way bill where the value is more than 50,000, including tax. Okay, and e-way bill has a validity. Once we raise a e-way bill, it has validity. The validity of e-way bill is dependent on the number of kilometers. Up to 200 kilometers one day. For every, once it crosses 200 kilometers, another day will get added. For every multiple of 200 kilometers or fraction of 200 kilometers, one more day will add. Simple, na? Take the number of kilometers divided by 200. Take the number of kilometers given in the question. Divided it by 200. You will get 1 point something, 2 point something. Round it off to next number. Here how many kilometers are? 290. 290, if you divide it by 200, it comes something 1 point. So take it as how many days? 2 days. The validity of e-way bill is 2 days. The decision in GST council would be taken by a majority of not less than 3/4. A&Co firm was dissolved and GST registration was cancelled. What is the limit within which must file a final return? Previously only we said, sir, final return. Within 3 months from date of cancellation or order of cancellation, whichever is later. So the date of cancellation is August 31st. 3 months, na? September, October, November. 30th November 2022. So the MCQs also will get repetitive, sir. This one repeated only. This one repeated only, but in a different way. Next, Jagat & Co. is a manufacturer of footwears and registered under GST law. It wants to avail QRMP scheme. QRMP scheme, in returns chapter it will be there, sir. Quarterly returns and monthly payment scheme. It's not composition scheme. Let me show you once. See, QRMP scheme. The QRMP scheme is applicable, can be opted by any registered person whose turnover is within 5 crores. Within 5 crores. Aggregate turnover is within 5 crores. And composition scheme, sir, I am having 4 branches. I want only composition scheme for 2 branches. Do I have the option of doing like that? No, I don't have such option. Either all the 4 registration should be under composition scheme or all the 4 should be under the normal scheme. But QRMP scheme, you can opt registration wise. Out of 4 branches or 4 registrations, 2 can be under QRMP and the other 2 can be under the regular. What is called QRMP full form? Quarterly return, monthly payment. Quarterly return of what are quarterly? GSTR 1 you will file quarterly. GSTR 3B also you will file quarterly. The tax payment alone you will do monthly. Quarterly return and monthly payment scheme. 1 and 3B you will file quarterly. But only the tax payment you will do monthly. So, what is the monetary limit, sir, for QRMP? 5 crores. Under the GST law, taxable supply of services by a banking company, 45 days. Input tax credit on amount of IGST available in electronic rate ledger shall be utilized for tax payment of. Okay, I assume at least this you know. IGST credit I am having. With what we should use first? Then with CGST or SGST in any ratio, in any proportion, in any order. That's what. First for IGST, then for CGST or SGST as per the choice of the dealer. Lakshman & Co. Hyderabad is engaged in supply of both goods and services which are liable to GST. Sir, where he is? What is the threshold limit? It is not liable for registration. Hyderabad na Telangana. Telangana na PT Suma. What is the limit? 20 lakhs. What is the monetary limit for gift given by employer to employee in a financial year that is not treated as supply? 50,000. Repeated only. Who will levy and administer IGST? Central government. What is the monetary limit for generation of e-way bill? Just now said more than or equal to 50,000. Which of the following statement is incorrect? Power to levy GST on alcohol for human consumption remains with the state government. Correct only, sir. Still now, even now, when I am starting the class, I discussed this. On manufacture, there is excise duty except on alcohol. On alcohol, state excise duty will be levied. So, power to levy GST on alcohol for human consumption remains with what? State government. Then along with GST, additional excise duty is levied by the state government on tobacco. Wrong, sir. Why? Central government will levy. Central government will levy central excise duty as well as GST. Okay. Next, for petrol and diesel, the GST council has to decide the date from which it will be applicable. Crude oil and natural gas are not taxable under GST law. So all these are correct only. The B only. Sorry, all these are correct except B. Next, under GST, due date of filing GSTR 7. So you have a question, what is called GSTR 7? GSTR 7 has to be filed by a person to whom TDS applicable under GST. TDS applicable under GST. GSTR 7, 10th of the following month. Sir, even for GSTR 8 also same due date. GSTR 8 is applicable for TCS person. If TDS is applicable, GSTR 7. If TCS is applicable, GSTR 8. Next. So, time of supply, sir. Okay, I'll tell, sir. This is a provision which I need to tell. Some 10 minutes it will take. This one related to credit note, sir. A credit note is issued by dash and it is a, sir, credit note or debit note. In both the cases, it will be raised by whom? Supplier only. So, when credit note will be raised to decrease or increase? Decrease. So, decrease now here see, reducing. Supplier and reducing the tax or taxable value. So, this one, sir, 70 related to time of supply only, that is section 14. Time of supply when there is a change in tax rate. Time of supply when there is a change in tax rate. Let's say from 1st January 2025, the tax rate from 12% it changed to 18%. Now the question is, whether 12% is applicable, 18% is applicable is the question. Okay, how do we solve this? For this, to decide this, we'll take three things: date of completion, date of invoice, date of payment. These three are the important these three are the factors which decide whether it is old rate or new rate. Date of completion, date of invoice, date of payment. These three are the deciding factors which will decide whether it is old rate or new rate. Simple thing. Out of these three, majority falls after 1st Jan, new rate. If majority falls before 1st Jan, old rate. Let's say completion is on 6th Jan, whereas invoice is on 25th December, whereas payment is on 3rd January. How many are after the rate change? 2. So majority are after rate change. So majority are after rate change. Na, which rate is applicable here? New rate. Sir, majority after na new rate. Majority before na old. After 1st January. Here 3rd January is after rate change. 6th Jan after rate change. Majority is after rate change. So which rate is applicable? New rate is only applicable. Okay. If majority are before rate change, old rate is only applicable. Okay. So out of these 3, which 2 falls? I mean, out of these 3, if majority are after rate change, then new rate is applicable. If majority are before rate change, then old rate is applicable. That decides which rate is applicable. Clear? Now, sir, now possibilities are like either date of completion or date of invoice may decide. First possibility. Second possibility, date of completion or date of payment may decide. Third possibility, date of invoice or date of payment. I mean, majority we are taking now. Okay. First thing we found out which rate is applicable, old rate or new rate. Old rate or new rate, how will decide? Majority after change rate, after change na new rate. Majority before change na old rate. Clear? Then date of completion, and let's say the 2 which decided as new rate or old rate is date of completion or date of invoice. Okay, out of 3, 2 things will decide now, old or new. The 2 things which decided it as old rate is date of completion and date of invoice. Remember, in these provisions, completion can never be time of supply. We cannot take completion as time of supply. Okay. Sir, completion is something like Katappa in this provision. Okay. Understand why Katappa na? It helps to decide time of supply. It helps to win the battle, but it will never become king. Okay. Same here, out of these 3 maybe have equal powers, but out of these 3, whichever the 2 are one side na, then that rate will be taking. But now date of completion and date of invoice na, this Katappa can never become king. So what is the time of supply? Date of invoice. Next here, date of completion or date of payment. Again Katappa can never become time of supply. Date of payment. But the third one here, it is what? Date of invoice or date of payment. Katappa led ikkada. Here there is only Balal Deva and Bahubali. Whoever is stronger, that is whichever is earlier. Whichever is earlier. If it is invoice or payment, whichever is earlier. Completion or invoice, ignore completion. Invoice is the time of supply. Completion or payment, ignore completion. Payment is the time of supply. Now we'll decide the MCQ. Raja supplied a machine to Mr. Ranka on 28th July 23. So completed on date of completion when, sir? 28th July 23. Applicable rate 12%. 1st August rate got changed. Raju issued an invoice on 4th August. So when the invoice, sir? 4th August 2023 is the date of invoice. Date of payment when, sir? 10th August. So here if you see, completion 28th July, invoice 4th August, payment 10th August. Old rate or new rate? New rate, because the tax rate was changed on 1st August 23. Majority are after rate change, before rate change? After rate change. So which rate is applicable? New rate. New rate. New rate now, what is the new rate? 18%. So which 2 decided it as new rate? Date of invoice or payment. There is no completion here. Invoice or payment now, whichever is earlier. Which is earlier? 4th August. So 4th August and 18%. Okay. This is regarding the MCQ, sir. So I said in between the class also, once again I am repeating, maybe few students. So here there are some 8 questions, sir. These are from mock test papers. I said here, direct tax versus indirect taxes, benefits of GST, okay, then constitution, GST council and its functions, then taxes subsumed into GST, then what are the features of indirect taxes, then need for GST, then the difficulties, I mean nothing but this also need for GST only. Next GSTN. These questions are only repetitively, frequently they are asking in the first question from the introduction chapter. Okay, the problem is for those two questions there are, for that 14 marks hardly there are 6 to 7 questions here. The 6 to 7 questions, don't read from the material whichever you like, read from only suggested answers or mock test papers. Okay, the answer which we usually provide in either my material or even any other material also, it will be somewhat short answers will be given. But whereas institute is giving a much more elaborative answers with the same kind of meanings. If you read that now, at least you will give much more length to your answer or some more points to the answer, because we are not sure whether the examiner, the one who is evaluating our paper, will be having key as this paper. So it's better if you write this answer, and because there are only 7-8 questions. If you read 3-4 times these 7-8 questions, you could write an answer better than that. Out of 14 marks, getting 10 to 12 marks is good there only. Okay, if you write my material answer also, okay, in my material I already condensed and I brought down to somewhere like 10 lines or 12 lines. You again condense that in exam, it will come to 5 lines, 6 lines. So you'll get 2 to 3 marks. 4 to 5 and all, imagination only. So that's why read this answer only. Okay, 3 questions are, sir, I am telling in GST, first chapter we know out of these 7-8 questions only we are going to get. Then customs we know one question from where they'll ask usually. Then value of supply question, easy one only. Time of supply problems you could do. Composition scheme sum you do. Then ITC. ITC na the total, the regular sum only. Like you need to calculate on purchases, you need to calculate ITC. On sales, you need to find out tax payable and adjust the ITC with the tax payable. The same standard sum that you practice. And registration chapter, calculating aggregate turnover and finding out whether registration is applicable or not. And one more thing, effective date of registration concept is there. From there only, almost, sir, from GST there are 6-7 marks questions. 5-7 marks questions will be from this only. The one question only maybe may go out of our expectations. The other questions and all will be within our expectations only. The only problem is like you doing comedy mistakes in exam, especially in customs and all. Okay, thank you. Okay, so coming to customs, sir, in customs, from customs, like we'll get 2 MCQs. We'll get 2 MCQs, 4 marks and 1 7 marks question. So we'll get total 11 marks from customs in exam. The question which they are asking usually related to, problematic question. It has 2 parts, sir. The question which is problematic, it has 2 parts. I mean question only, I'm talking about question only, it has two parts. One part of the question is related to types of duty. The other part of the question they'll bring it from valuation. Types of duty na. So let's say in question there is assessable value, because customs duty will be levied on a value. The value, the total on which we levy customs duty is called as assessable value. That okay, this is the value on which we'll be levying tax. Okay, so on assessable value, first we'll be levying BCD. BCD na basic customs duty. So regarding BCD rate, there will be a provision which are important for solving the problems and all. So BCD rate, on which day the BCD rate has to be taken. So BCD rate na, the BCD rate as on the date of bill of entry or entry inwards, whichever is later. Bill of entry or entry inwards, whichever is later. So you'll have question like what is called bill of entry, what is called entry inwards and all. For this we need to understand the process of import. The first step, sir, whether the vessel or the aircraft, the truck, whichever is coming from outside India, that is referred as conveyance. The vessel, aircraft, truck, train, whatever the mode of transport we use, that is called as conveyance. For every conveyance there is one person, I mean then is an in charge called as person in charge. For vessel he is master, for train he is conductor, for aircraft pilot or commander. They are called as person in charge. So this person in charge of a vessel, sorry, of a conveyance, this person in charge of a conveyance has to file IGM with the customs office. He needs to file IGM. IGM na import general manifest. IGM means what? Import general manifest. Import general manifest. So what does it contain? It consists of details of both imports, it consists of the details of passengers, crew, the goods which they are carrying in that vessel, which are to be unloaded in the India or which are going to be carried along with the ship to other countries. All those details will be given in the IGM, and this will be filed with the customs office before the vessel, aircraft enters India. Okay. Person in charge of conveyance will file IGM. This has to be filed electronically before arrival. This is the first step. Then second step, the customs office, from customs office there is a proper officer. This proper officer will verify what? This IGM. Okay, whether those goods consist any prohibited goods. Okay, that and all he will verify. PO will verify. On verification, if he is satisfied that the goods can enter into India, he will grant entry inwards. He grants entry inwards. Only when entry inwards is granted, the vessel can enter into India. Next, third one. Only when entry inward is granted, the vessel can enter into India. Okay. The vessel, once entry inward is granted, it will go to the port premises, and in the port the unloading will be taken. The unloading will be carried in the supervision of proper officer. I mean, you cannot unload when there is no customs officer. Only when he is available you can unload the goods. Okay, only when entry inwards. So first step is like you file IGM, get entry inwards. Once you get entry inward, then go into the port and your goods can be unloaded. Next, once the goods are unloaded, Unloaded goods will remain in the custody of custodian. Unloaded goods will remain in the custody of custodian. Unloaded goods will remain in the custody of custodian. So custodian, the total port is maintained by him, managed by him. The one who manages the port is called as custodian. If you go to Shamshabad airport, it is maintained by GMR. So then the GMR company is the custodian for Shamshabad airport. When you go to some other seaports, there will be Adani ports which are maintained by Adani. So then Adani ports is, that company is called as the custodian. So once the goods are unloaded within the port premises, the goods are in the responsibility of custodian. Okay. So imported goods now landed into India and they were in the custody of custodian. Now importer, the importer who wants those goods, importer has to file bill of entry to get those goods, has to file bill of entry, BOE, bill of entry. Bill of export is different, bill of entry is different. Bill of export na at the time of export. This is what bill of entry. Now, bill of entry. Importer has to file what? Bill of entry. Okay. This bill of entry is of three types. This bill of entry is of three types. One is direct home consumption. There is one bill of entry which is for direct home consumption, which will be in white color. Direct home consumption. Direct home consumption, na, you'll file bill of entry, you pay the applicable taxes and all, and you can take the goods to your premises. Then that is called as home consumption. Then the second type of bill of entry is for warehousing. In this case, you will not pay any customs duty. You will postpone the payment of customs duty. You will just file bill of entry and take your goods to the warehouse. So this bill of entry will be in yellow color. Yellow. And the last third one is warehouse to home consumption. I mean, from port, you took your goods to warehouse. From warehouse, again, you need to clear them to your premises. Na? Then you will file another one, that is warehouse to home consumption. And this will be in green. Green. So there are three types of bill of entries. The three type of bill of entries are, one is for direct home consumption, one is for warehousing, and one is from warehouse to home consumption. Those three are white, yellow, and green. Okay. So once you file bill of entry, you can remove the, you can take your goods. Okay. Sir, it's not like you pay tax and file bill of entry. First you file bill of entry. Then the customs office will verify it, whether you computed the tax and all properly or not. Once they verify, then they'll return to you. Okay, after their verification, they'll return the bill of entry to you. Once they return, you need to pay the tax immediately. You need to pay the tax immediately. Sir, all the concepts which we discuss will somehow connect to this process. So you need to understand this process. First thing is what? The person in charge will file then IGM. Goods, the customs office will verify it and grants an entry inward. Once the entry inward is granted, the vessel or aircraft will go to the port. The goods will be unloaded in the supervision of proper officer. The unloaded goods will remain in the custody of custodian. So now goods came and they are landed in the port. Being an importer, to get your goods, you need to file bill of entry. Bill of entry, if you want to pay duty and to clear the goods, then file bill of entry for home consumption. But you don't want to pay the duty now. You want to postpone it. Or else you want to take only few goods now. The other part you will be removing after some point of time. Then you will be filing bill of entry for warehousing in yellow color. Once the goods are warehoused, subsequently if you need to remove the goods from warehouse, you need to file a bill of entry third type in green color. And there are numbers also. Form 1, Form 2, Form 3. White one is Form 1, yellow one is Form 2, and the green one is Form 3. 1, 2, 3. Clear? Now, what is called India? Sir, India means the total Indian land is India only. And India includes its territorial waters. Territorial waters extends up to 12 nautical miles. And then there is something called exclusive economic zone. So what is this exclusive economic zone? Sir, territorial waters, this is Indian territory. If someone comes into this territory, then this is a breach of Indian security. This is a breach of Indian security. So the imprisonment, the rigor, the punishments will be higher when someone unauthorizedly enter into our territorial waters. What if it is an exclusive economic zone is a territory, it's a line which is kept for the economic activities. Territory is for security reasons. Exclusive economic zone is for economic business reasons. So India or Indian government or Indians has the power, has the right to go and carry business till this exclusive economic zone. This exclusive economic zone extends up to 200 nautical miles. How many? 200 nautical miles. Clear? Beyond 200 nautical miles, whatever is the sea, this is called as high seas. Beyond 200 nautical miles, it is called as high seas. Okay? Sir, can someone enter into exclusive economic zone? Even into exclusive economic zones also, the other country people cannot come into exclusive economic zone. Only India or the one to whom Indian government has given license, only they can carry out any economic activities in the exclusive economic zones. If someone comes into exclusive economic zones, it is a offense only, punishable offense only. But little lesser than crossing territorial waters. Crossing territorial waters, unauthorizedly coming into the territorial waters is a much more bigger offense than entering into exclusive economic zone. You understood, right? So territorial waters extends up to 12 nautical miles, exclusive economic zones extends up to 200 nautical miles. Not all the territorial waters and the exclusive economic zones, the sea water, the subsoil, the sea is bed. Underlying the water also there is soil. Beneath the sea water also there will be soil. That sea soil and the seabed will also to be treated as India only. Okay, now the question is, a ship is coming from outside India. Okay, this is ship only. Okay, the ship is coming to India. Now, import means we know bringing goods from outside India to India. As per definition, exclusive economic zone itself, I said India. Now the question is, ship if it crosses exclusive economic zone means it entered into India, goods entered into India. So does the tax needs to be paid when they cross exclusive economic zone or when they cross territorial waters or when they touch land of India? When is the when it has to be taxed? When the goods are leviable to customs duty is the question. You understand? So for that there is various Supreme Court case laws and all. They said like import is not a single step. Import is a process which starts when the good cross territorial waters. I mean, when the ship cross territorial waters, the process of import starts and it continues and ends when the goods touch the land of India. Okay, so the ship may be traveling from here to here and it may take 3-4 days time to the till the point the goods touch the land of India. So once the goods touch the land of India, then the import is complete. But the question is, okay, import is completed. When we need to pay tax? You understand my point? When we need to pay tax? The payment of tax is not on crossing territorial waters, not on unloading, not on touching the goods. Okay, not the goods touching the land of India, but when subsequently when goods were landed, we'll be filing bill of entry. Post bill of entry will be paying the taxes. So the fourth point is, even filing bill of entry is also not the point you will be paying taxes. You need to pay tax only when you are removing the goods from customs barrier. I mean, you are taking the goods from customs premises to the normal area. Then only you are responsible to pay customs duty. So the taxable event is removing goods from customs barrier. It's not unloading, it's not crossing territorial waters, it's not crossing exclusive economic zones. When you are removing goods from customs barriers, that is the taxable event. You understand? Sir, understand the point. Why they kept it is like that? My goods are coming in a ship. They were unloaded. Once I open the packets and when I verified them, all of them are damaged. Once they're damaged, I'll not pay any customs duty because I'll not have any value from it. I'll revoke the title there itself. I'll abandon the goods there itself. I'll go. I am not responsible to pay any tax. The goods were imported. The goods came from outside India to India. Technically, if you answer it, it is an import because the goods entered into India, they were landed into India, it's an import. But the taxable event didn't arise because the taxable event arises only when the goods crosses the customs barriers. So the process of import is different, taxable event is different. Just because it is import will not pay customs duty. Only when taxable event arises will be paying customs duty. What is the taxable event? Goods crossing the or removing the goods from customs barriers is the taxable event. Okay. This is the process. Okay. Now come back here. Types of duty. Here types of duty. First what we took here, sir? Assessable value. Assessable value, what we should take here? Bill of entry or entry inwards, whichever is later. So usually in question he'll give bill of entry date, entry inward date. On these two dates there will be different tax rates. We should take which dates related, whichever is latter. So taking this BCD rate is an important step here. Identifying this BCD rate. Bill of entry or entry inward, whichever is latter. That will be applying here. Next. We need to levy social welfare surcharge. Social welfare surcharge is at a rate of 10 POS on import only. Okay, 10% on BCD, but social welfare surcharge is leviable only on import. Sir, in MCQ they may ask like, what is the, simply ask like the FOB value of export is 1 lakh, BCD applicable is, okay, the FOB value of export he'll give simply as like 1 lakh, and he'll say like the BCD applicable is 10%, and he'll ask an MCQ like calculate the customs duty payable. So what we'll do, we'll apply BCD 10%, 10,000. The usual thing which we practice like whenever there is BCD, we'll apply social welfare surcharge at a rate of 10%. But since it is an export, social welfare surcharge is not applicable. Okay, only on imports social welfare surcharge is applicable, not on exports. So, but since in options they'll give even social welfare surcharge 10% or 1,000, they'll give an option for 11,000 as well as 10,000. So by applying social welfare surcharge, we'll think it as like what, 11,000, and we'll be pretty confident like this answer is correct also. Okay, so entry inwards or bill of entry, whichever is later, that you levy. Okay, then you will do, okay, here afterwards. There may be something called anti-dumping duty, or there may be something called safeguard duty. If these duties are applicable, then levy those duties also. After levying those duties, we need to do a subtotal. Subtotal. Assessable value, then as the BCD, on BCD we need to levy what? Social welfare surcharge. Then if anti-dumping duty, safeguard duty applicable, levy them as well. Then you will find out subtotal. Now on this subtotal we need to levy IGST at given rate and even compensation cess at the given rate. IGST will be levied on this subtotal. Sir, again for cess also, generally the income tax thing will calculate cess on tax amount. But in GST, compensation cess is not calculated on the tax amount. It has to be calculated on the subtotal on which we levied IGST. The same amount we levied IGST, on the same total even we should levy the GST cess percentage as well. Let's say here the subtotal is some 10 lakhs. IGST also has to be applied on the 10 lakhs only. Cess also has to be applied on the 10 lakhs only. So this is the format for tax computation. This is nothing but types of duty chapter. Assessable value, if it is given, on that first we need to levy what? BCD. BCD na which rate? Bill of entry or entry inwards, whichever is later, take that rate and apply on it. Then take social welfare surcharge at a rate of 10%. Apply on what? BCD. Okay. Usually, there will not be anti-dumping duty and safeguard duty. If at all they ask also, anti-dumping duty and safeguard duty, they will be like a separate questions. They will not mix with the usual question. Okay, if at all they add them as well. After adding them, you will get a subtotal. That subtotal is the base to levy IGST or compensation cess. So that subtotal itself is the value of supply considering GST. So on that we need to levy the tax. You understand? Okay. Now what is value of valuation chapter here? Sir, valuation chapter is nothing but finding out this assessable value itself is the target of valuation chapter. Through this valuation chapter, what we understand is nothing but this assessable value we are taking now. On assessable value, we are levying tax. Finding that assessable value itself is the objective of valuation chapter. Finding assessable value. Okay. For finding out assessable value, there are rules. Rule 1, applicable for customs valuation. These rules applicable to whole of India. That's what rule 1 says. Then there is something called rule 2. Rule 2 is about definitions only. Whenever we have definitions, then we'll discuss. Then we have rule 3. Rule 3 says like, take transaction value itself as assessable value. Take transaction value. Transaction value na, the value which is transacted between two parties. Sir, I went to a fruit vendor, sir, and I asked for some dozen apples. He said like 1,000 rupees. I gave 1,000 rupees and took apples. Just I took the cover and about to start my bike. Then one auntie came and she asked like, how much are the apples? That fellow said 1,000 rupees. She said like, I'll give 300 rupees, and that fellow gave also. Okay, so for me, moye moment. So now the point is that fruit vendor and me are not related persons. Okay, other than the 1,000 rupees on the fruits, there is no consideration between them, between us. So the point is, the 1,000 rupees which I paid is also a transaction value. The 300 rupees which is paid by her also transaction value, because none of us are related. Other than price, there is no other consideration. All these happened within the seconds. Okay, both can be treated as transaction values only. We cannot argue like, if here it is 1,000, why can't there also be 1,000 and all? We cannot say. We should check only whether they are related or not. Whether other than price, any other conditions are there or not. If nothing is there, then transaction value itself you can take it as assessable value, but you need to add some other extra points. That and all I'll come into the format. Okay. So there are 4 conditions. First, to take transaction value, 4 conditions. Seller and buyer should be unrelated. Whatever the consideration, okay, you cannot take transaction value as assessable value. No, you cannot take transaction value as assessable value when supplier and buyer are related. When they are unrelated, you can take, no problem. Next, the consideration which I paid is in non-monetary. Sir, paying it in non-monetary also not a problem here. For that non-monetary thing which I paid, you cannot find out a monetary benefit, monetary value. Let's say I need to pay 5 lakhs. I gave gold coins. You can find out monetary value for gold. But the problem is I paid or I given something for which we cannot ascertain the monetary value. We cannot ascertain the monetary value. I paid consideration for which we cannot ascertain monetary value. Then in such case we cannot take transaction value. If at least, even though non-monetary also fine, if you can find out monetary value. Let's say sir, 10 lakhs for 10 lakhs I given some 50 grams of gold and 7 lakh rupees as cash. Then for the 50 grams which I paid in gold, you can find out the monetary value easily, even though it's a non-monetary consideration. In such case it is fine. But if it is a case where you cannot find out monetary value for the non-monetary consideration I paid, then you cannot take transaction value. For the consideration is a non-monetary, and for non-monetary you cannot find out monetary value, cannot be find out. Okay. Alekia only, na? Okay. Alekia went to a store and she purchased a chips packet. Lays bingo. Okay. The shop guy is saying like, you should eat it here itself, and only by standing only you should eat this. So such kind of conditions and all he's inserting. What you will do usually if you set such kind of condition? నువ్వు వద్దు నీ చిప్స్ ప్యాకెట్ వద్దు అని చెప్పి ఓకే మొహాన్ కొట్టి విల్ థ్రో ఇట్ ఆన్ హిస్ ఫేస్ అండ్ విల్ కమ్. బట్ here it is a case where supplier inserted such kind of conditions and buyer accepting. The problem is when the buyer accepts. Okay, if మనం యూజువల్గా ఇప్పుడు ఏం చెప్పామో ఆ రియాక్షనే, బట్ ద పాయింట్ ఈస్ అలేకే agreed to that and she is standing there and eating the chips packet also. Okay, then we have a question like why she is accepting that conditions, whether the price got compromised or what. Okay, understand? If the 10 rupees chips packet, if he is given for free, then there is a chance of eating it by accepting conditions, or given for 1 rupee, 2 rupees. Then since we are getting it for somewhere 1 rupee only na, okay, we'll accept his conditions and then we might have accepted those conditions. So when seller imposes such kind of conditions, there is a chance of price getting compromised, you cannot take transaction value. Okay. Seller impose conditions. And then the fourth case, buyer shall not share his resale proceeds. Sir, I purchased for 10,000 initially. That's the transaction value. But the point is, our contract says like, subsequently the good which I imported will be selling in Indian market na. I'll be selling the good which I imported in Indian market. When I am selling, out of the sale money which I got, I need to share some amount with the exporter, with the one who is in outside India. Not only the 10,000 which I paid initially. I paid 10,000 initially for a TV which I imported. Subsequently, the TV if I sold in Indian market, let's say for 20,000 rupees, out of that 20,000, some amount I need to pay back again to the exporter. So then what happening? Buyer shall not share resale proceeds. So here I am selling resale proceeds. If I am sharing resale proceeds, my resale proceeds, in that also 5%, 10%, if I am again sharing, then the initial 10,000 paid is not only the consideration, no. I paid 10,000 extra this share as well. So that's why we cannot take transaction value only. We should take transaction value plus this share. If the share is identifiable, no problem. If you cannot quantify the amount exactly how much I am going to share subsequently, okay, so based on contracts they may differ. In some cases it may be plain like on sale price 20% I have to give, it would be easy only. But if it is something like on profit I should give 20%, calculating profit is little tricky because I have so many other expenses as well which takes time also, and profit may differ. Sale price may be fixed or constant one. So that's why if the buyer has to share the sale proceeds subsequently with the exporter, then we cannot take the transaction value. I mean the price traded among between them cannot be taken. In all the other cases, if they are unrelated, if the consideration is money form, even though in non-monetary you can find out money value. Third one, seller is not imposing any conditions. Fourth one, no resale proceeds sharing and all, then you can take transaction value as assessable value. Then there is a format, sir. Here the format is like, first we should take ex factory price. Sir, what is this ex factory price na? This is the price at the factory gate of exporter in exporting country. Sir, when there is an import transaction, exporting country now outside India, let's say for the easy understanding of concept, from Australia we are getting goods, then Australia is exporting country. Okay, so ex factory price is the price in Australia. In Australia the seller will be there now at his factory gate, the price is called as ex factory price. This is nothing but his cost plus profit, his cost plus profit at his factory gate, at the supplier's factory gate. Okay, sir, our assessable value is there na, We will not be levying tax on ex-factory price. We will levy tax on assessable value. Can we take ex-factory price as assessable value? No. CAF value only we can take it as assessable value. CAF itself is the assessable value. The question is, what is CAF value? CAF value can be taken as CIF, cost insurance freight value. We can take it as assessable value. The question is, what is CAF? CAF value is the value including all the costs when the goods are unloaded in India. It is the price when the good is unloaded in India. So the price in Australia factory gate and the price when it is unloaded into India may not be same, because from factory gate there are so many other expenses also has to be incurred. So we need to add all those other expenses to arrive this CAF value or assessable value. So for ex-factory price we need to add first. For ex-factory price first we need to add the freight local one, sir. Local na, not within India. Australian freight. Australia from the factory to port they need to transport the goods. Freight and even insurance. If we add that freight and insurance, now the goods came till the port gate. After adding freight and insurance, the goods came till the port gate. Then from there you need to add loading and handling charges. Loading and handling. I mean, from port the goods are now loaded into ship. The price at which the goods are loaded into the ship in export country is called as FOB. When the goods are loaded into the ship, the price at which the goods are loaded into the ship is called as FOB. FOB na, free on board. Free on board. But customs authorities say like, we will not accept this FOB. Okay, they want FOB customs, not FOB. So for FOB, to find out FOB customs, there is something called Rule 10. It talks about some incidental expenses, expenses which are related to this transaction. Those has to be added to the FOB, then will arrive FOB customs. Okay, first one, we need to add commission and brokerage. We need to add commission and brokerage, except buying commission. Okay, in question if you see buying commission, ignore it. If it is not mentioned as buying commission, whatever it is the commission, you should add it. Commission and brokerage you should add. Why commission and brokerage, sir? If there is no such kind of good purchase and sale, then there is no point of incurring such commission. So that commission is incurred only because of this transaction. So that commission is incidental to the sale of such good. So commission and brokerage you should add. Next, you should add designing charges. You should add designing charges when they are incurred outside India. You should add designing charges when they are incurred where? Outside. When they are incurred in India, you shall not add. Only outside India you should add. Then packing. Packing you shall add. Packing. Okay. Commission and brokerage, designing charges, packing, then royalty and license fee. Sir, I purchased a car, self-drive, not auto-drive car. Okay, auto-drive na, the car, it doesn't require a driver. When I just put a location in the map, the car will go directly to that place. So that car works not only on the engine, ties, not only the physical appearance, even a software should be preloaded into that, which could control all those things. So for that software we need to pay a royalty and license fee. That royalty and license fee also we are adding. Commission and brokerage, designing charges, packing, royalty and license fee. Then we should add inspection charges. Then free of cost material supplied. Free of cost material supplied. Commission and brokerage you should add. Designing charges you should add. Packing charges, royalty and license fee you should add. Inspection charges you should add. free of cost, material supplied you should add, and even sale proceeds. Sir, here I said like resale proceeds shall not be shared. Na? If they are shared and that amount, if you can calculate exactly, add here, then it's fine. Sir, initially I am paying 10,000, sir, and subsequently on my sale price, some 5%, 10% I am going to pay. That 5% and 10%, if you can identify that, calculate that, add it here, then it's fair. Okay, add share of sale proceeds. 7 points, sir, which we should add. If you add these 7 points, then you will get FOB customs. Then you will get FOB customs. Then you'll get FOB customs. So for FOB to FOB customs, you should add how many points, sir? 7 points. What are those 7 points? Commission and brokerage, designing charges, packing, royalty and license fee, inspection charges, free of cost material supplied, share of sale proceeds. After adding this, we'll get FOB customs. We got FOB, but we need to arrive what? CF. So for CF, we need to add insurance. Insurance. Insurance, if it is given in the question, take actual. If it is given in the question, take actual. If it is not given in the question, then take 1.125% of FOB customs. FOB customs. Then freight. Freight given in question. Sorry, not given in question. Question does not mention anything about freight. If it is not given, then take 20% of FOB customs as freight. 20% of what? FOB customs. If it is given in the question, the same freight, if it is given in the question, then we should again think whether it is sea freight or air freight. Sea freight, air freight. Sea freight, no problem. Since given in the question, take actual. Take actual. Freight, if it is given in the question, and if it is sea freight, take what? Actual. If it is air freight, actual or 20% of FOB customs, whichever is lower. So freight not given in the question, take 20%. Given in the question, sea freight, take actual. Air freight, actual or 20% of FOB customs, whichever is lower. Then, so sometimes a big ship cannot enter into India due to the changes in the depth of sea. The sea depth will not be constant, sir. It will change according to the cyclones, full moon day, new moon day, and all. The depth of the ocean will change. So in some cases, a big ship cannot come near the port because of these changes in the depth. Okay. Then the small boats will be used. The goods will be unloaded or will be transferred into the small boats, and the small boats will bring the goods to the port area. Now the freight paid to the small boats also has to be added. That is nothing but called as boat charges or light rate charges. Boat charges or light rate charges. And then if there is a delay in unloading of goods from ship, if there is a delay of unloading the goods from ship, then there will be ship demurrage. When there is a delay in unloading the goods from ship, then there is something called ship demurrage. Such ship demurrage also has to be added. Sir, don't confuse with the demurrage. There are two types of demurrages. One is ship demurrage, other one is port demurrage. Port demurrage after unloading. We'll be adding costs only till unloading. Post unloading, whatever the costs are incurred, that will not add. So port demurrage is incurred after unloading, will not add. Ship demurrage is incurred before unloading, so will add. Then we'll arrive CF value or assessable value. On this assessable value, we'll be levying the taxes as I said previously. Okay, this is the 99% model question which they are going to ask in the customs. This format. So you should know from X factory price to how to arrive the CAF value. On that CAF value BCD, Then as social welfare surcharge, anti-dumping duty or safeguard duty. In this standard question, generally they will not link anti-dumping duty and safeguard duty. So you will levy BCD and SWS. You will do subtotal. On that you will levy IGST and GST compensation cess. And you will calculate the total customs duty payable. That's the usual model question which they are asking for 7 marks. Other than that, there are no other chances of asking 7 marks question. Okay. You take, there is no rule like IGST is 18%. IGST could be 5%, 12%, 18%, 28%, anyone, depending on the goods. So whatever the rate given in the question is only you should take. They will give IGST rate in question. Okay, but there is one provision in invoice chapter which says like when you have no clarity regarding tax rate, you should take always as 18%. Then when you have doubt regarding intrastate and interstate, then you always assume it as interstate and levy IGST. Okay, so 18 is not a standard rate. 18 is a most common rate which you find. 18 and 12. Service na most commonly will find out 18. The limit of exclusive economic zone of India is dash from the nearest point of baseline, 200 nautical miles. Sir, next, sir, you should understand here, the MCQs which they are asking from IDT are generally, first of all, IDT paper itself once the new syllabus came, IDT has become so easy. The questions which they are asking is like, if you study first chapter and customs chapter. First chapter I already said, 18 marks. Only the basic introduction chapter, 18 marks. Customs, 11 marks. 29 marks only from these two chapters. From all the other rest of the chapters you will get. And from the other chapters also, composition, time of supply, value of supply, ITC. Here you will get again some 18 marks. Okay, from these three now, time of supply, value of supply, ITC, at least 2 7 marks questions will get 18 or okay, 18 marks here only. Then next one is like registration chapter. Registration chapter they are asking registration and composition. Out of these two, 1 7 marks question will come. That's what. From old syllabus to new syllabus, one paper which I thought they are asking very easily is like DT and IDT. Even DT also it was easy compared to the old syllabus DT 100 marks paper. They used to go too much depth into the paper, but now they are not asking like that. Standardly, if you such salaries chapter, if you go, don't start, I mean, when we take classes, like we'll start from HRA and every provision will be explaining like, and the chapter goes for 20-25 days. You don't read like that. Like salaries chapter, institute material or whatever the material you do, there will be some 5-6 consolidated problems. That only they'll ask every time. Out of them, there will be common provisions. Every time they'll ask one motor car perquisite point will be there. A gift related point will be there. HRA will be there. And one PF related one will be there. That's all. There will not be extra points. They only will get repeated. That question only will ask from there. Residential status. So, and salaries and residential status will come in a single question. So, you cannot leave salaries as choice. If you leave salaries as choice, then even residential status will go as choice. So, you should study salaries and residential status. Then the next question is like house property PGBP. So, usually people will do house property so much, but what's the use? You don't know PGBP, or even you know only some part of PGBP. Most commonly taken question as choice. Okay, so it's no point even you preparing house property as well. Then the next question, capital gains and IFOS. Okay, that question you need to prepare. Capital gains and IFOs. So IFOs you could answer. So it's better if you prepare capital gains by leaving PGBP and house property. Okay. Then other last question. Set off carry forward clubbing and the total income. Again total income na PGBP connected. We cannot, or else deductions related connections and all will be there. That you cannot solve. So the set off carry forward and clubbing will go waste. So that's why it's better to practice IFOs, along with that study capital gains and leave the other ones. GST, you could answer all the 3 questions, sir. You don't require choice in GST, because if it is like the usual form, first one is complete theory question, first chapter, introduction chapter. From the third question, you will be having one customs related question. And the second question will be related to this time of supply, value of supply, ITC, or composition. 4 problematic related part only they'll ask there. The third question, the first part, they may ask registration related one. That's what the paper is. So simple it is, fixed, okay, and it is going to be the same way as well. Okay. Cheyaru. Scope లేదా అంటే లైక్ వెన్ ఎవర్ లైక్ సిలబస్ చేంజ్ అయినప్పుడు ఫస్ట్ 3 అటెంప్ట్స్ మనకి అర్థం కాదు. But now the last 2 attempts consistently they are following, even the latest mock test paper also following the same one. So it would be only the format. And 90% వాళ్ళు ట్యాక్స్ పేపర్ టఫ్ చేయరు, అది ఈజీగానే ఉంటుంది. సో ట్యాక్స్ పేపర్ పరంగా అయితే ఫాలో అయిపోవచ్చు. అండ్ యుల్ ఫైండ్ అవుట్ దోస్ ఇన్ ఎక్కువ అకౌంట్స్లోనే ఎక్కువ షఫ్లింగ్స్ జరిగి ఏమైనా మారుతుంటాయి. సో మీరు చూడండి లాస్ట్ 3 అటెంప్ట్స్లో నోబడీ సెడ్ లైక్ ట్యాక్స్ పేపర్ ఈజ్ టఫ్. వాళ్ళకి మార్కులు రాలేదేమో, బట్ పేపర్ ఈజ్ నాట్ టఫ్. అండ్ ఇట్స్ గోయింగ్ టు బీ ద సేమ్ వే. ట్యాక్స్లో టఫ్ కాదు, టఫ్గా రావు. వచ్చే 2 అయితే అకౌంట్స్ రావాలి లేదా కాస్టింగ్ రావాలి. అక్కడ ఎంసీక్యూస్ని ప్రాపర్గా చేసుకొని ఉంటే, ఎంసీక్యూస్ ప్రాపర్గా ఒక 3-7 మార్క్స్ క్వశ్చన్స్ ప్రాపర్గా చేసేలాగా పర్ఫెక్ట్గా ఎంసీక్యూస్ చేసేలాగా ఉంటే అయిపోయింది ఈ పేపర్. లేదు, ఇంకా ఈజీ ఇప్పుడు, అంటే అట్లీస్ట్ ఈసారి పెరుగుతాయి అనుకుంటాను నేనైతే పర్సంటేజెస్ పాస్ అయ్యాలి. లాస్ట్ టైం తక్కువ ఉంది, ఎందుకంటే లాస్ట్ టైం నేనే చెప్పలేదు ఇలా వస్తుంది పేపర్ అని, బికాజ్ నాకు తెలియదు అప్పటికి. లాస్ట్ టైం పేపర్ చూసిన తర్వాత దెన్ ఓకే ఇలా ప్రిడిక్ట్ చేయొచ్చు అనుకుంటున్నాం. నేను చదివేటప్పుడన్నా CMA రాస్తున్నప్పుడు స్కానర్ ట్రెండే ఫాలో అయ్యేవాళ్ళు. ఇప్పుడు నేను చెప్తుంది స్కానర్ ట్రెండే, బట్ స్కానర్ కాకుండా నేను అనాలిసిస్ చేసి చెప్తున్నాను అంతే. సో అది ఎప్పుడు జరిగేదే. OMSM అలాంటి కామన్ సమ్స్ రిపీటెడ్గా అలానే వస్తుంటాయి. ఓకే, మీరంటే కోచింగ్ కన్నా వెళ్ళారు, మాకు ఇప్పుడు OMSM చెప్పే అసలు ఉంటాడని కూడా తెలియదు. సో స్కానర్ పట్టుకోవడం, ఆ ట్రాన్స్పోర్టేషన్ సమ్మని కష్టపడి ఏదో 4 సమ్మలు బట్టి కొట్టి నేర్చుకుంటే అదే వస్తుందని చేయడం. ఆ సిమ్యులేషన్కి లాజిక్ తెలియదు, ఏం తెలియదు. అది తెలిస్తే దీని ప్రైస్ నేను 30,000 పెట్టామండి. అంతే కదా, దీని నుంచే వస్తుంది, ఇది రాదు, చదువుకి వెళ్ళిపో, స్లిప్పులు కూడా పెట్టగలుగుతారు. అప్పుడు నేను నమ్ముతున్నాను వస్తాయి అది. అంతే కదా, అప్పుడు లైక్ మాకు అన్ని BCAకి మొత్తం అన్నీ తెలుసు, ఇందులో నుంచే ఈ క్వశ్చనే వస్తుంది అని తెలుస్తామంటే ఎగ్జామ్ సెంటర్ ముందు కూర్చుంటాను, డైరెక్ట్ క్లాసులు కూడా ఉండవు. అంతే. ఇక్కడ So, sir, in customs, if you see, entry 83 of the union list of 7th schedule, even GST introduction when we are discussing also, article 246 constitution 7th schedule, article 246 consists of 3 lists: union list, state list, concurrent list. In union list, customs is entry number 83. Entry 83 of union list of 7th schedule of article 246 is empowered to levy customs duty. From there you're getting the power. Okay, now you'll get a question like, what is the entry number of GST? Okay, but the GST is not under article 246. The power to frame GST law is given under article 246A. So under 246A there is only GST, so we need not to discuss about entry numbers and all. But whereas under article 246 there are many others also, so that's why the customs related entry number is entry 83. So customs is not a single act, sir. Here customs law which we are discussing is of 2 acts. One is Customs Act, the other one is Customs Tariff Act. Tariff means rates. Customs Act, the second one is Customs Tariff. Customs Act usually consists of the normal provisions: when to levy tax, on what value we need to levy tax, how the tax will be collected, all these provisions in the Customs Act. Tariff Act consists of only tax rates, the rates applicable. So Tariff Act consists of 2 schedules: first schedule, second schedule. First schedule consists of import duties, second schedule consists of export duties. Next, adjudicating authority. Sir, adjudicating authority, the authority which is competent to pass an order or to take a decision under customs is called as adjudicating authority. If I can take a decision or can pass an order as per customs, then I am called as adjudicating authority. The below 3 are also capable of taking decision, capable of making an order, but these 3 are not called as adjudicating authorities. One is CBIC, one is Sestat Tribunal, one is Commissioner of Customs Appeals. These 3 can also take a decision or pass an order, but these 3 are not adjudicating authority. Next, assessment. The process of assessment is nothing but determining dutiability. Dutiability, sir, dutiability, taxability, same only, synonyms kind of. Duty is an older word, ancient word. Tax is a modern word. That's what. Okay. So duty, determination of dutiability, determination of taxability. We'll find out whether a good is dutiable, taxable or not, and we'll find out the value of tax as well. Okay. Determining dutiability and the amount of duty or any other amount so payable. This is called assessment. But while doing assessment, we should consider these 5 points. First one is tariff classification. Why? Tariff classification, there the goods are grouped into various categories. On every good there is one particular tax rate. So while doing assessment, you should consider tariff classification to find out the tax rate or duty rate. Second one, value, because the tax will be levied on value, so value is important. Third one, if any exemption or concession is there, such exemption and concession has to be reduced, so you should consider exemption and concession. Next one, quantity, weight, volume measurements. Quantity, weight, volume measurements, now sir, in customs there are 2 types of levying taxes, sir. One is like based on the value of good will be levying taxes. The second one is like such as like petrol and all. It's not based on value, it's based on number of liters we import. The custom duty on petrol will be fixed like per liter 10 rupees, 12 rupees, like that. So it's not on value, it's on the quantity. Even the same on cigarettes. Cigarettes, the customs duty is fixed based on length of a cigarette, not on value. So on certain goods it is based on value, on certain goods it's based on quantity, volume, measurement. So those are also important. The last one, origin. Why origin is necessary now? Origin means the place from where the goods are coming. Origin, why it affects our assessment means, if the country is a preferential country, friendly country to India, then the tax rates may be lower than that of the actual rates or the normal rates. So there are 2 rates. One is normal BCD rate and the second one is preferential rate. So to apply preferential rate, the good should be originating from a preferential area. So origin is also important. Assessment means determination of taxability, I mean finding out whether they are taxable or not, and even finding out the amount of tax or if any other amount payable. While doing that, you should consider tariff classification, value, exemption and concession if any available. Fourth one, their weight, volume, measurements if any needed. And the last one is like their origin, like bill of export. The document we submit to let our goods export. The application we provide for exporting our goods is called as bill of export. Coastal goods, the goods starting at Vizag and going to Chennai, or from Vizag they are going to Mumbai. So Vizag is towards Bay of Bengal, whereas Mumbai is towards Arabian Sea. This way Vizag, sir. Okay, here Goa. So if the goods has to be come through ship, they have to come here. The goods here, like here Sri Lanka, the goods go to the ship will go to Sri Lanka and again come back to Goa. Now, the goods origin is India, destination is India, but in between they went outside India. But they are not import and export, they are not taxable because they are called as coastal goods. Next, India definition we completed, high seas beyond 200 nautical miles. Import, export, goods. Goods means vessels, aircrafts and vehicles. Stores. Stores are the ones which we use in the aircraft and vessel, the petrol and all. Then baggage. Baggage means the luggage which the passenger carry. Currency and negotiable instruments are also called as goods, and even any other kind of movable property. The definition in GST and customs is different except to the extent of movable property. Here also movable property, there also movable property. Here specifically they are saying like the vessel, aircraft, vehicles are also good, stores also good, baggage also good, currency also goods. Then charging section, sir. Here the charging section is section number 12. The charging section of customs is section 12. When there is an import or an export, you can levy customs duty. Import means the import of goods will commence when they cross territorial waters but continues and complete when they become part of mass of goods. When they are unloaded. Taxable event. Unloading is not taxable event. Date of entry into territorial waters not a taxable event. Presentation of bill of entry not a taxable event. Goods crossing the customs barrier is a taxable event. Next, duties can be classified into two types, revenue duty, protective duty. Revenue duty, they are levied for the purpose of raising customs revenue. Whereas protective duties, they are intended to give protection. So duties, whenever government levy tax, the main intention is to generate revenue. But in customs, there are certain type of taxes. By levying them, yes, government will get revenue, but their intention is not to generate revenue. Their intention is to protect the domestic industry. Let's say, for example, if you are not wearing a helmet, the traffic people will levy fine or penalty on you. Yes, by levying fine, government will get revenue, but the intention is not to get revenue. Intention is to encourage you wearing a helmet. You understand, right? So the objective is different, even though they'll get incidentally money as well, but the objective is here protecting indigenous domestic industries. Those are called as protective duties. Now first one is BCD, sir. We discussed BCD. When it is a home consumption, then the BCD rate we should take is like bill of entry or entry inwards, whichever is later. And exchange rate, exchange rate given by CBSE as on the date of bill of entry. Sir, import and export transaction will be usually in dollar or other foreign currency. We need to convert into Indian rupee. For converting it into Indian currency, we should use the currency of CBIC given exchange rate as on the date of bill of entry. The exchange rate as on the date of bill of entry. When it comes to BCD rate, bill of entry or entry inwards, whichever is later. Whereas exchange rate, directly bill of entry. Very important, sir, these two lines. Exchange rate, bill of entry only. But for BCD rate, bill of entry or entry inwards, whichever is later. Bill of entry or entry inwards, whichever is later. For what? BCD rate. But whereas for exchange rate, bill of entry. Then this additional duty to compensate excise duty. This is CVD, sir. What does this means? Before GST came, then when goods are imported, on them there will be BCD. There is no IGST that time because GST is not there. So that time they used to levy excise duty equivalent. In India, on Indian manufactured goods, there is excise duty. The equivalent of excise duty will be levied even on imported goods, which we call it as CVD, countervailing duty. But now GST came, This countervailing duty has no relevance. Only on few goods it is there. Petroleum products and on alcohol. Because on petroleum and on alcohol there is no GST. That's why on them still CVD is only applicable. Next. Previously there used to be VAT when there is a sale of goods within the country. So the equivalent of VAT also will be levied on import goods, which we call as special CVD. The equivalent of VAT is levied even on imported goods previously, which is called as special CVD. But now VAT also subsumed into GST. So there is no special CVD also except on petroleum products and alcohol. So the CVD is equivalent of excise duty, special CVD is equivalent of VAT. Currently these are subsumed into GST, that's why IGST came into picture. But there are certain goods on which GST is currently not applicable. Petroleum products and alcoholic liquor for human consumption. On them, even now, CVD and special CVD is only applicable. Social welfare surcharge, I said 10%. But whereas on gold, silver, platinum, diesel, it is 3%. Next, AIDC. There is something called Agricultural Infrastructure Development Cess. This is levied. There is no rate given in the question, in the material itself, sir. It is dependent on the product to product. Okay, so when it is asked, they'll give in the question itself the AIDC rate and all. So the AIDC has to be levied on the assessable value only. Next, IGST discussed. The maximum rate of IGST is 40%. Next, cess also will be levied on the same value on which IGST is levied. Next, safeguard duty. What is called safeguard duty? Safeguard duty is levied when there are increased imports, when there is when a good is imported into India in increased quantities, when there are imports into India of such good in increased quantities. Let's say there are huge mobile imports into India in increased quantities. Just because they are in high quantity, not a problem. That high quantity is creating a problem, damage or severe damage to the domestic industry. So increased importation is causing or threatening to cause serious injury to the domestic industry. There are increased quantities of import of a particular good, and such increased import is causing or threatening to cause serious damage or injury to the domestic industry. Then safeguard duty will be levied. Safeguard duty is levied product specific. I mean, on mobile safeguard duty, if mobile is coming from whichever the country, safeguard duty is applicable. Okay. Safeguard duty, once they brought, it will be in force for 4 years, and it can be extended for a period of overall 10 years. Okay. Whereas it is taking time for them to identify the actual, to calculate the safeguard duty rate and all. Then in the meanwhile, for the interim period, they can introduce a provisional safeguard duty as well. Provisional for the time being, they'll introduce something which is called as provisional safeguard duty. Provisional duty will be in force for a period of 200 days. Next, safeguard duty is not applicable in following cases: when the goods are imported by SEZ or EOUs. SEZs or EOUs, then on them safeguard duty is not applicable. Next, when we are importing goods from developing countries, sir, understand, we are importing goods from developing countries. Let's say, see here, this example. There are 5 developing countries, sir, A, B, C, D, E, okay, and there are others as well. All the other countries, A, B, C, D are developing countries. From each country we have 50, 70, 80, 40, 120, and the others is 3,140. Total it came to 3,500 crores. Where the share of import of such a product from a developing country is less than 3% of total imports, less than 3% of total imports, then safeguard duty is not applicable. So if you see, from country A the percentage is 1.42, from country B it is 2%, from country 3 it is country C it is 2.25, country D it is 1.14, whereas from country E it is 3.42. Individually from the first 4 developing countries it is within 3%, safeguard duty is not applicable. But whereas on the 5th country it is more than 3%, so on this country safeguard duty is applicable. This is what mentioned here. There is another point which says like, okay, individually even though it is less than 3%, check aggregately. Individually even though it is less than 3%, check aggregately. Aggregately if it is more than 9%, then also safeguard duty is applicable. Sir, count here, it is more than 9%. 1.42 to 3.42, 5 point something, 6 point something, and 3. You need not to do exact also, you'll understand. 3, 5, 6, 9 points lo undi pakkana inka. So obviously it is more than 9%. Aggregately it is more than 9%. Then what? Safeguard duty applicable. Okay, this is the mistake which we do usually. Understand? While calculating aggregately, exclude the share of imports from a country which is more than 3% individually. That means this one you should exclude and count. Only the first 4 you should count. If individual share of imports for a country is more than 3%, on that safeguard duty is applicable, leave that. For the rest other countries, rest other developing countries, if the aggregate is within 9%, no safeguard duty. More than 9%, then safeguard duty is applicable. See, if you see here, it is total how much? 6.81% only. Aggregate of import from developing countries, each with less than 3% import share taken together, does not exceed 9% of that article into India. Okay? Then, countervailing duty not important, sir. Then, anti-dumping duty. Anti-dumping duty is levied to control dumping into India. Dumping, na, sir, in China, that fellow will sell his good in China for 10,000. But whereas for India, he sell it for 5,000 only. So he is sending goods to India for a price which is lower than the price in his country. Then that is called as dumping. So to avoid such kind of cases, sir, why he will sell for lower prices in India? To create market here. One thing. Second one, he has excess production. So that excess production, he is dumping here for a lower cost. Just for break-even recovery, he is dumping the goods into India. But whereas China, he is selling it on a margin. But here he is dumping them for break-even, just to recover his cost. Okay, so in such cases, to avoid such dumping and all, anti-dumping duty is levied. Okay. Sir, with this I think we can go on proceed with the MCQ, sir. Which of the following is taxable event for imported goods? Date on which goods cross the customs barrier, presentation of bill of entry, Indian territorial waters, unloading. Sir, we already discussed this. The date on which goods cross the customs barrier. Next. Basic customs duty on imported goods is levied at the rate specified in. Where the customs duty rates are, they will be mentioned, sir. Tariff Act. Customs Tariff Act 1975. Next. For the purpose of computing IGST on imported goods, one of the following shall not be added. So see here and tell. Which shall not be added? Okay. Compensation shall not be added. Social welfare surcharge. Remember the format, na? Assessable value. First BCD. Then social welfare surcharge. Then anti-dumping duty, safeguard duty. You do subtotal on that GST. So compensation cess comes after GST, not before GST. So you are asking like, which shall not be added to the amount for calculating GST. Cess shall not be added, whereas social welfare surcharge and anti-dumping duty shall be added. What is the insurance amount? If insurance is not given in the question, 1.125%. If freight is not given, what we should take? Transportation charges incurred by the importee for transporting goods from factory of exporter to port of exportation shall be included in the assessable value. Sir, understand this question and tell which freight it is. In the format we covered actually. Sir, exporting country na, we are importer. Exporting country na, Australia or something, Australia. So there from factory to port, we call it as local freight. It has to be added or not? In the format, sir, if you see, I have it. See, ex-factory price, we are adding what? First one, freight. What freight? This is from factory to port in exporting country. That has to be added or not? Yes. So since it has to be added now, so that's why they said it as what? Yes. As per section 2, subsection 31, person in charge means for vessel it is master, true. train, conductor, vehicle driver, then all of the above. Next, sir, there is something called identical goods and similar goods concept. Identical goods means identical goods na they look like same. They'll perform same functions. They have same quality, same characteristics, only minor differences. Thumbs up and Pepsi. Identical goods. This fan, which company it is? Okay, let's say assume Crompton company fan. If you compare it with Orient, Usha, Kangar, any other ceiling fan, if you compare, they look like same. This AC and that AC. This is one company, that is one company. They look like same, they perform same kind of functions. Then they are called as what? Identical goods. Okay, when we go for identical goods now, I said like we can take transaction value only 4 conditions are satisfied. What if they are not satisfied? Then we'll go to rule 4. Rule 4 says like take identical good value. Okay, I purchased this Godrej company ka, I imported this Godrej company ka AC sir. But me and Godrej company are related persons. So I cannot take this value as transaction value. So what is the identical good for it? Another company, Samsung, IFB, LG. So those companies' value will be taking. But if this particular AC I imported from Australia, na, the other identical good also shall be coming from Australia. If possible from same manufacturer. If not same manufacturer also fine. But at least it should be from the same country. The good I imported and the identical good which we are taking as a measure or taking as a comparison shall also be coming from the same country. If it is same manufacturer, na, fine. Thumbs up and Coke. Identical goods only, same manufacturer. It's much more better. So if Coke is available now, first preference should be given for thumbs up. First identical good should be Coke. If Coke is not available, then we'll go for Pepsi. You understood right there? Okay. So identical goods means that. And again, there is one more provision, sir. Sir, there are multiple identical goods now. For this company, for one particular Godrej AC, there are LG, Samsung, Voltas, Blue Star. Then there are so many companies ACs are there. All of them are identical goods. Out of them, which good value we should take? Whichever, same country. All of them are coming from same country. Then which we should take now? Whichever is less. Whichever is less value has to be taken. Goods which are same in all aspects including physical quantity is known as identical goods. Then what are called similar goods? They doesn't look like same but perform same kind of functions. They doesn't look like same but perform same kind of functions. Ceiling fan, table fan. They doesn't look like same but perform same functions. Normal bike and Activa. Bike will have gears and all. Activa will not have gears, so they doesn't look like same. But both are used for transportation only. That one. Thumbs up Sprite. Doesn't look like Sprite, but for same purpose. Okay. Those are called as similar goods. Buying commission shall be included or shall not be included? So he's asking whether it is correct. Buying commission has to be included. No, it's not correct. An article which is imported into in India shall be liable to integrated tax at such rate not exceeding %. IGST cannot be levied beyond 40%. So it is 40%. An article which is imported into India is also liable to a duty equivalent to the excess duty for the time being liable on a like article if produced or manufactured in India. So just previously I said CVD, special CVD. CVD na equivalent of excess duty. Okay, but institute wrongly given it as additional duty, sir, but the exact answer is countervailing duty. Next, the maximum rate of additional duty. Additional duty na, this is special CVD. This is normal countervailing duty, special CVD. It cannot be beyond 4%. It is there in the material also. But sir, this and all, some MCQs are from old syllabus also. They as it is retained them. This not relevant. I mean, this additional duty and all these related questions they are not asking these days. It was there. Which of the following conditions are to be satisfied for enhancement of import duty? Okay. Sir, in certain cases the import duties can be increased. question. Okay, even if you read theory also, this question I will not cover is, okay, theory also will not cover this one. So the point here is, in which of the following conditions are satisfied, the central government may provide. Okay. In which of the following conditions are satisfied, central government may provide for enhancement of import duty. When the import duty can be enhanced, increased. First of all, it should be a good which is mentioned in tariff act, first schedule. Then the government should feel it necessary. The situation should arise, a necessary situation should arise to enhance the customs duty. Only when these two conditions are there, then they can enhance. The good should be specified in first schedule. Central government is satisfied that circumstances exist which render it necessary for enhancement of import duties, both 1 and 2. Okay. Central government can impose safeguard duty when an article is imported into India in increased quantities and such increased quantities is causing or threatening to cause serious damage or injury to the domestic industry. So both 1 and 2 has to be satisfied. Next, the total period of levy of safeguard duty is restricted to dash years. How long sir safeguard duty can be maximum levied? 4 years. It can be extended for a further period of, so overall it is 10 years. Sir, as per section 14 of Customs Act, transaction value shall include in addition to the price any amount paid or payable for cost. Format related one, sir. For transaction value, shall we add commission and brokerage or not? Yes. Designing and engineering, we should add. Royalty and license fee, we should add. So the option is all of the above has to be added. Next, transaction value shall also include in addition to the price, the below ones needs to be added or not. Cost of transportation to the place of importation. Till the Indian port, whatever is the transportation, that we should add. After unloading, if any freight is incurred, that we shall not add. So this has to be added. Insurance, we shall add. Insurance, we shall add. Then designing charges also we shall add. Next, for imported goods, on what day the exchange rate for conversion has to be taken? On what day the exchange rate for conversion? When we imported goods, the goods will be in foreign currency, na? We need to convert them into Indian currency. Which rate we should use? Currency rate given by RBI. Yes, sir. Currency rate given by CBAC as on the date of bill of entry. But whereas BCD rate, na, bill of entry or entry inwards, whichever is later. Okay, so bill of entry. For the purpose of customs valuation, rate of exchange means the rate of exchange notified by dash. CBAC shall be taken into account. Next, subsection 2 of section 14 provides that board may fix for any class of imported goods or exported goods having regard to the trend value of such like goods. Sir, I said previously, like customs duty, some cases it is levied on the value. In certain cases, it is levied based on the quantity, value, measurement and all. When it is levied based on quantity, value, measurement, then that is called as tariff value. Then that is called as tariff value. When it is normally levied like GST on the value of good, if you are levying as percentage, then that is called as ad valorem duty. Ad valorem. Ad valorem. Okay. But when it is levied as a per kg 5 rupees, per liter 10 rupees, like that if the duty is fixed, then that is called as tariff rate. If it is percentage, 10%, 5% on the value like that, then that is called as ad valorem duty. The term similar goods means imported goods. Similar goods means what, sir? Will they look like same? Identical goods look like same. Similar goods may not look like same, but perform same kind of functions originating from the same country, if possible same manufacturer. Similar goods, although not alike in all aspects, have like characteristics and like components which enable them to perform the same functions. Produced in the country which the goods being valued are produced, from the same country where we imported. Produced by the same person. Yes, all the three. Next, loading and unloading handling charges associated with the delivery of imported goods at the place of. Sir, loading and unloading charges not given in the question, sir. What we'll do? Do we add anything notionally? For freight, we'll add how much? 20%. For insurance, we'll add 1.25. There is nothing like for loading and unloading. So we'll take how much? 0. Okay. The anti-dumping duties and countervailing duties, sir, this out of syllabus, sir. This one not there also in our syllabus now. Duty drawback related 75, not there. Okay. Let me even go through the previous exam related. Now we are into December 19 related exam, sir. Exclusive economic zone extends up to how many nautical miles? 200 nautical miles. As per section 2 subsection 1, adjudicating authority means any authority competent to pass an order or decision but does not include CBIC, Commissioner, SESTA, Tribunal. So all of the above. Supplies made to SEZ or developer of SEZ is 0 rated. In GST we said exports are also 0 rated, supplies to SEZ and SEZ developer are also 0 rated. Assessment means the process of determining tax in accordance with provisions. It even includes all the kinds of assessments are also part of assessment. Provisional assessment, temporary, interim assessment, where the regular calculation takes like some more time, means then for the time being to pay the taxes immediately, they'll do some rough calculation kind of they do. That is nothing but called as provisional assessment. Then self-assessment. We calculating our tax on our own. Then that is called as self-assessment. Then the next one is reassessment. Department rechecking it is called as reassessment. All these are part of assessment only. Dash will be charged on luxury products like high-end cars, demerit commodities like pan masala, tobacco and aerated water. Sir, GST compensation cess is not levied on all the products. GST compensation cess is levied on intrastate, interstate. Okay, which are demerit goods. Demerit goods not necessary for day-to-day living of a common man. Okay, they are something like luxury. So see here, high-end cars. Car necessary, high-end car not necessary, so that's why on that they will be levying GST. Then pan masala, tobacco, aerated drinks, without them also we can live peacefully. So that's why GST compensation cess is not levied only on demerit goods which are not necessary for a day-to-day living. And compensation cess is levied to compensate the revenue loss to state government. Sir, what happened? Certain states are losing revenue due to introduction of GST. Then central government came forward and said like, my huna, I'm there for you, I'll compensate all your losses. Till then it's fine. But what central government is doing to compensate losses, central government is not using its money. It is again levying an additional tax on us, calling it as compensation cess. Through that additional levy, whatever the revenue they generate, that would be used to compensate the loss of revenues to the state. Okay, next. This is which paper, sir? Now we are into June 2019. In case actual insurance charges are not given, how much we should take, sir? In case actual insurance is not given in the question, 1.125%. Okay, sir, this is one thing which we didn't cover. Within what time bill of entry has to be filed? We know bill of entry has to be filed 3 types, white, yellow, green and all we know. Within how many days? Sir, if today the vessel has been erased, then The next, okay, within 1 day, sorry, it is something like following day to the succeeding day. Following day to the succeeding. That means tomorrow and day after tomorrow, within 2 days. But here if you see, under section 46, importer shall present bill of entry before the end of dash following the day. Sir, you cannot take 2 days here because following the day is one thing added. So following the day is 1 day. So in blank you should fill how much? 1 day only. So 1 day plus following day. Together it is 2 days. All derelict, jet sam, float sam, wreck. This means, sir, wreck means, sir, if a ship got broken and a piece of it came into the shore because of tides. Okay, it was not purposefully brought to the shore, it came because of the tides. A part of the ship which was sunk some time back, it came into the shore because of the tides and all. This wreck, if I am collecting it now, that is also import. That wreck which came to the shore, which was not brought by any person purposefully. It came to India because of tides. If someone wants to collect that wreck, that also has to be treated as a import only. Next, wreck is that one. Derelict. Derelict na, sir, you know Titanic was sunk into the sea. Okay, and it was never came back to the shore as wreck and all. So if you see Titanic movies, the introduction scenes and all, if you see, like, there is that special teams which will go and find out the parts of Titanic. I don't know which it is actually happened or not. I mean, the set operations and all. But in the movie, they'll show it as like a team will go deep into the sea and they'll find out the parts of Titanic and all. If those parts, if they are bringing to India, then that is called as derelict. Okay, this also broken parts of ship only, but these were brought separately by a team. Okay, then that is derelict. That also has to be treated as what? Import only. Then jetsam and flotsam. Sir, the ship is heavy and it is about to sunk. So then to reduce the weight and all, certain goods were thrown into the sea. When they are thrown, some goods may float and come to the shore. They are called as flotsam. Some goods may sunk there, and then special teams will go and bring them. Then they are called as jetsam. Jetsam na, they'll sunk into the sea. Flotsam na, they'll float over the sea. Okay, so all these has to be treated as like what? Imported goods only. Sir, but their value will get affected now. Yes, whatever the value they have, on that only duty will be levied. As per section 2, subsection 31, person in charge means for vessel master, train conductor, vehicle driver, all of the above. Next. What is the maximum permissible amount of freight under customs law in case of import of vessel? Sir, vessel now, what will be added? If it is not given in the question, 20%. If it is given in the question, actual. So even though it is more than 20%, we can take actual. So that's why here they is given it as actual. Sir, exam lo manaki sugar వస్తుంది. దానివల్ల ఏంటంటే కొంచెమే చదువుతా ఆన్సర్. ఫ్రైట్ అనగానే 20% FOB ఆర్ యాక్చువల్ అమౌంట్ విచ్ ఎవర్ ఈజ్ లెస్ అని తెలిసిన ఆన్సర్లా కనపడగానే ఏం చేస్తాం అలాంటి వాటిని? జనరల్లీ విల్ మార్క్ దెమ్. బట్ అండర్స్టాండ్ ద పాయింట్ హియర్, సార్. 20% of FOB, 20% of FOB or actual amount, whichever is less. Third one, actual amount, which we should take. Actual amount might be higher than 20% also. Still that we can take. So here they are asking, what is the maximum permissible, the highest amount for vessel? If they asked for aircraft, na B is the correct answer. So maximum not be A, because if actual is beyond 20%, we cannot take. Actual will take only 20%. For air freight, how we'll calculate, sir? 20% or actual, whichever is lower. So whichever is lower na, if actual is beyond 20% of FOB, we'll take what? 20% only. So maximum permissible is how much? 20% of FOB only. Dash bill of entry used for clearance of goods from warehouse to home consumption. Warehouse to home consumption. Which one? Green. White, yellow, green. Green. Next. under Customs Act, which is not a mandatory document required for export. So this is not there in our syllabus currently, but this was June 19, old syllabus one. That time this chapter is there. When you are exporting goods, sir, you should have a bill of lading or airway bill. Bill of lading or airway bill, this is a consignment note which is given by transporter. Proof of loading the goods. The proof of loading the goods is nothing but bill of lading. Okay, this bill of lading is nothing but proof of loading that we should have. Next one, commercial invoice come packing list. Invoice must be there. Third one, sir, bill of export. So all these three are necessary for export. Only bill of entry is not required. Okay, sir, even if you don't read those also, if you apply common sense, you can answer this, because bill of entry is something related to import. Here he is asking related to, he is asking clearly not mandatory for export. This bill of entry we know clearly it is for import, so this is only not mandatory. Next, according to Customs Act, how many nautical miles, sir? 12 nautical miles. Next, when goods are cast into sea to reduce weight to prevent it from sinking is known as jetsam. Cast into sea, sir, they are thrown into sea with speed so that they will sunk. When they are thrown like a way that they should float, then they are called as flotsam. Person in charge with respect to aircraft is commander or pilot in charge. Countervailing duty. Sir, countervailing, just like as anti-dumping duty, safeguard duty, there is one more duty called countervailing duty also. When countervailing duty will be levied means, when the foreign country is giving subsidies to them, to the exporters. Because the foreign country is giving subsidy, they can produce it at a low cost. And those low cost items they are bringing into India. But whereas Indian manufacturer is not getting such kind of subsidy, whereas the foreign supplier can sell it in India for a lower price because of that subsidy. Whereas Indian manufacturer cannot do that. So that because of that, Indian manufacturer will get effect, because once the foreign good is for a lower price, now we'll buy the foreign good only. So to protect indigenous manufacturer, they levy countervailing duty. If it is levied for 5 years and can be extended for another 5 years. Again, territorial waters, how many nautical miles, sir? 12 nautical. You could see how many times this question has been, 12 nautical miles has been asked. So because of this kind of questions only, we could tell like they'll follow a trend and all. Okay, the same kind of questions will come. Next, June 23, recent one. Dash means a vessel or cargo which is abandoned in sea without any hope of recovery. Titanic, sir, without any hope of recovery, derelict. Under customs rule, the loading, this also repeated, sir, the loading, unloading, handling charges. Freight 20%, insurance 1.125, but loading and handling, no, 0. In applying rule 4 of customs valuation rules, for one transaction value of identical goods, which is found, dash shall be used to determine the value of imported goods. Sir, if there are more than one identical good available, which value we should take? Lowest one. So that only, lowest of such value. The provisional safeguard duty levied shall be enforced for how many days? Provisional safeguard duty levied shall be enforced for 200 days, sir. We discussed this in the theory as well. 200 days. Same here, sir, again. Next, under Customs Act, all goods, derelict, jetsam, flotsam and wreck brought coming into India shall be dealt with as if they are into import only. Under customs law, the limit of exclusive economic zone is 200 nautical miles from the baseline. June 2024, so the last one, latest one, if you see. Under the following values, IGST cannot be levied on following. On what IGST cannot be levied? Assessable value plus BCD plus SWS. Yes. Sir, if you remember the format, assessable value, BCD, SWS, fine. Those can be added. Or else BCD plus anti-dumping, fine. BCD plus anti-dumping duty. Assessable value plus BCD plus anti-dumping duty plus safeguard duty. This is also fine. This is only out of the box. BCD plus cess, because cess comes after the IGST. So this we cannot add. Under tariff act, safeguard duty shall be ceased to have effect on the expiry of 4 years from the date of 4, sir. This is 4 years. However, it can be extended for a period of maximum of 10 years. 4 years and 10 years. Okay. This is about customs, sir. You can take break. After break again we'll continue.